So very good afternoon, everyone. So in the previous class, we concluded the basics regarding to cost of capital, right? So today we need to talk about capital structure. So without basics, you can't solve remaining problems. In advanced problems, everything concept is interlinked. That's why I'm detailing explaining about the basics first. Okay. Now when it come to the cost of capital chapter, we learned the calculation of KO or weighted average cost of capital with the different sources, right? Now when it come to the topic capital structure, for example, in our in a previous class, we observed company required 100 CR in cost of capital. They procured from different sources 20 CR, 20 CR, right? Okay. Just I will give a overview regarding that. Company needed 100 CR. I have three options. Option 1, 2, 3. When it comes to option 1, 20% equity, 50% debt, and next pending portion 30%, 30% preference. That is my option 1. So when it comes to money point of view, 20 CR, 50 CR, and 30 CR. So if company need 100 CR, they are procuring that money from 20% with help of selling of equity shares, 50% with help of debentures, 30% with help of preference shares. Now when it comes to option 2, 70% equity, 30% debt. Option 2 means 70 CR only from equity funds, just 2 minutes. 2 minutes. Okay. So when it come to here, capital structure, right? Our next concept. First, for understanding of the capital structure, I will explain an example. You will get a clarity what is meant by capital structure. Company needed 100 crores of rupees. They have three options. Out of three options, they need to choose the best one. Are you clear? The best mix is known as capital structure. We are using a word called optimum capital structure. In yesterday class, one word is there, non-optimum. At that time I said, now I will explain capital structure. This is the meaning. Optimum capital structure means which give the best, which mix gives the best. As per option 1, I am procuring with help of 20% equity, 20% debt, 50% debt, 30% preference. As per option 2, 70% through equity funds, 30% through debt, 30 CR. Total 100 CR is completed. Next, as per option 3, 10% through equity, 80% through debt, 10% through preference. Now you have to take a decision out of these three options, which one is the best for your organization. Guys, clear? Now tell me which one is the best one. First one is best one. For you? You don't know. Second option is the best one. For you? First one is best one. My point of view, third one is the best one. Based on example, we can't decide it is the best. With the help of calculation only, we can say it is the best one. Guys, clear? For example, if you take an example number 3, I can say, I said it is the best my point of view. But cost accountant saying that it is not a best. Why? Because of debt is more there, risk also more. Existing shareholders will expect more returns. Yes or no? No. That's why he's saying that it is not a best one. When it comes to second one, best one, you said best one, na? No, it is not a best one. Why? Because if you procure money from the equity source, your ownership is diluting. Ownership lose అయిపోతారు కదా మీరు. Guys, clear? That's why it's not a best one. When it comes to the third one, here also you can observe debt and preference is there. We need to pay more money than equity shareholders. That also be not a best. Now, which one is the best means we have to check the conditions. We have a 5 conditions. Guys, okay? Now, first you have to check ownership point of view. Other things remains constant. I am checking only ownership. In which option ownership is less diluting? Which option? Option number 3. Yeah? I'm not focusing about the risk. I'm only focusing about the ownership. Now, third one is the best option. That is called optimum mix. That is called optimum mix. Next, forget about the ownership. Next, I am checking risk. When it comes, I'm checking risk. Tell me, do you want more risk or less risk? Less risk. Now, then check out of 3 options, where is the less risk? Second one is the less risk. 30%, 50%, 30%, 80%. That only risk factor, na? Yes or no? Where is the risk less? 30%. That's why I am choosing second option as a best as per risk point of view. I am not talking about the ownership. Other things remains constant. Next, KO. What is the meaning for KO? Overall cost of capital. 3 options. Can I find out the overall cost of capital? That's a topic we discussed in previous class. Are you clear? Now, KO 11%, KO 12%, KO 13%. Do you want more KO or less KO? Where is the less KO? Now, which one is the best one? First option. I'm not checking ownership, I'm not checking risk factor, I'm checking only KO. Guys, clear? This is a way we're deciding optimum capital structure. That is nothing but capital structure of the company. Guys, okay? Now, other things remains constant. I am checking MPS. MPS, market price per share. Do you want more market price or less market price? More. I will calculate market price for 3 options. Where I get a highest market price, that is the best mix. That is optimum capital structure. Do you want more EPS or less EPS? I will calculate EPS for 3 options. I will check the I will take a decision where I get a highest EPS. That is the best optimum mix. That's the way we're deciding capital structure. ఎలా పడితే అలా డిసైడ్ చేసేయకూడదు. Guys, okay? We have a basis. Based on this only we can decide. But we can't take a decision more than one. We can take a decision only either one aspect. Either risk point of view, either ownership point of view, either KO point of view, or either MPS point of view, either EPS point of view. Hope you guys clear? If you're taking a decision with the help of one variable, remaining all are constant. Okay? Out of these 5, first 2 are theoretical explanation. There is a no calculation part. When it comes to last 3, it is a problematic portion. With calculation only, we can assign the KO, MPS, EPS to 3 options. That is a overview regarding to the capital structure. Now see. We have to decide first what's the optimum capital structure. Optimum means either you have to satisfy any one of the condition. Okay? Now further proving that condition, we have some approaches. We have some analysis. These topics, they are in your CMA intermediate, FM, capital structure. Now when it comes to, first I am talking about analysis. EBID to EPS analysis, EBID to MPS analysis, indifference point analysis, financial break-even point analysis. With the help of EBID to EPS, I can calculate EPS values. With the help of EBID to MPS analysis, I can calculate MPS values. Indifference point and financial break-even point is not required here. Hope you guys clear? So I know you already know the income statement as per financial decision. EBIT minus interest, you will get EBT minus tax, you will get EAT. If company have a preference share capital, you have to reduce preference dividend. If not there, EAT is nothing but EASH. Divided by number of shares, you will get an answer called EPS. That is called EBAD to EPS analysis. Okay? Into PE ratio. Into PE ratio, you will get MPS. That is called EBAD to MPS analysis. There is a huge discussion for PE ratio. I will explain. Don't worry. Next, when it comes to approaches. Here, approaches are classified into two types. Relevant approaches, irrelevant approaches. The relevant approach saying that market value of the firm, total value of the firm is there now. It will impact if your mix changes. What's the mean for relevance? Market value of firm change if capital structure changes. Simple. For example, last year I followed this mix, man. Last year, what is my mix? 20% equity, 50% debt, 30% preference. This year, I am changing to this mix. What is the current year mix now? 70% equity, 30% debt. Can I use a word called capital change mix changes? If mix changes, market value of firm also change due to that change. It's said by relevance theory. Are you clear? When it comes to irrelevance, if you can change your mix or not to be changed, market value firm remains constant. That is called irrelevant. Hope you understand. Done. First, are you understand the change of mix? That is called change of capital structure. Now see. Market value of firm change if capital structure changes. Market value of firm not change if capital structure changes. That is called irrelevance. This is called relevance. Now, for proving this sentence, we have two methods to calculate. Net income approach, traditional approach. One problem is there in final. For proving this sentence, net operating income approach method is there. Modigilani Miller, approach is there. Inuntara padam, approach, Modigilani and Miller. Gurtostne guys, clear? Done. Now the point is, what are the things you learn here? That is proving of optimal capital structure. Are you okay? Now, without late, I start with the net income approach. Net income approach. The net income approach saying the specified by David Durand. The theory propounded by David Durand. He was a financial analyst. He created the concept net income approach in 1930s or 50s that time. Okay, at that time tax and MNC culture is not that much, guys. Okay, it's a outdated concept. Now, as per him, he taken a few assumptions. The few assumptions are there is a guaranteed EBAT. There is a guaranteed EBAT. Are you agree for the statement? There is a guaranteed EBAT. Why? Because profits are uncertain. But he taken assumption, it is certain. Assumption na yevana diskoch. Hope you guys clear. The next assumption he taken as per cost of capital. I said 5 sources: equity share capital, preference share capital, debentures, term loan, retained earnings or reserves and surpluses. But he taken assumption market have only 2 sources of funds. One is equity, another one is debt. One is equity, another one is debt. Are you clear? Next, another assumption he taken. It's not assumption, it's practically also works. What is another assumption means? KD is less than KE. Cost of debt is less than cost of equity. There is a clarification also. KE don't have a tax advantage. KE don't have a tax advantage. That's why if my calculation is 12%, I'm not reducing 1 minus tax. I need to consider 12% directly. But pre-tax KD is 10%. I'm not considering the 10%. Out of 10%, I am reducing 1 minus tax. Now tell me, KE is bigger or KD is bigger? KD is lower, KE is bigger. That's the meaning KD is greater than KE. KD is less than KE. Guys, okay? You can also use a word called debt is a cheaper source of fund comparing to equity. Guys, okay? Now see. Let us check what happens. Company need 100 crore rupees of funds, guys. 100 crore rupees of funds. It is a existing company. Existing company means it already have a capital, na? Are you clear? At that capital, they procured with bonus funds only. It means the existing capital structure of the company is 100% equity. Okay. Now they need additional funds. How much? 100 CR. Okay. No. The company capital is 100 CR existingly. That 100 CR procured with help of 100% equity. The only obligation in the hands of the company is they need to settle expectation of the equity shareholder. That is nothing but KE only. Yes or no? No. There is a no KD, there is a no KP, there is a no KR, there is a no KT. The only settlement is KE. Why? Because 100% equity. Can I use a word called if 100% equity from KO is nothing but KE? 2 marks MCQ in June 23. If company having 100% equity, KE is nothing but what? KO. You need not to write an even explanation. Just you need to pick the option. Hope you guys clear? Done. Now, company required additionally 50 crore rupees, guys. Forgot about the 100 is the existing capital. Now, company need extra 50 crore rupees. For procurement of 50 crore, they have two options. Option 1, they can procure with help of, again, equity. Option 2, they can procure with help of debt. Now, which one is your choose? Why? Already said na, KD is less than KE. KD is less than KE. It means overall point of view, my cost will be reduces. Hope you guys clear? Now, if I choose option 1, again, I need to pay 12%. Why? Because existing shareholders are enjoying 12%. The new shareholders are expecting minimum that. Yes or no? No? Now, when, for example, if I choose option 2, I am need not to pay 12%. I can pay just less than 12%. In market, there is a 10% post-tax KD. Post-tax KD. So, based on this, I am choosing option 2. So, my cost is only 10%. What about overall? What about overall? If I pick option 1, what about the overall? For existing shareholders, I need to pay 12%. For this 50 crore new shareholders are coming into company na. For them, I need to pay another 12%. Totally, I need to pay 24%. Are you clear? If I pick option 2, for existing shareholders, for 100 crore rupees, I need to pay 12%. For 50 crores, here debt, I need to pay 10%. Total, you can observe 24%, 22%. Due to picking of debt, my overall cost of capital also decreases. He is specifying that if your overall cost of capital is decreases, your market value is increase. He specifies. I will prove. EBID is guaranteed, na? EBID is guaranteed, assumption. The guaranteed EBID for our organization 2 lakhs, just understanding purpose. Now, if I pick option 1, what is my KO? 24%. Huh? If I pick option 2, KO 22%. Now, market value of firm equals to EBID divided by KO. I will give a clarity for future. Just formula, understand. EBID divided by KO. Now, what is the option 1 EBID? In option 1 or option 2, EBID same. 2 lakhs divided by, what is the KO as per option 1? Now, please tell me the answer. 2 lakh divided by 0.2. 4 lakhs. Huh? Sorry, 0.24, right? Okay, thank you. No calculators, huh? Super video. 2 lakh divided by 24%, how much more? 8.3 lakhs, just for understanding sake. If I pick option 2, here also EBID same. Huh? If I pick option 2, guaranteed EBID, na? Option 1, 2 lakhs only. Option 2 also 2 lakh. Now 2 lakh divided by KO changes. Huh? What's the KO, guys? 0.22. Answer? 9.9 lakhs. Huh? Now, where is the highest market value? That's said by David Durant. In simple sentence, that is a cheaper fund. If you rises, your KD will be less. Due to less KD, your KO will be decrease. If your KO decreases, your market value of firm increases. What is the relevance theory condition? If capital structure changes, market value change. The change is increasing change here. Instead of option 2, if I pick option 1, what happens? Market value of some firm decreases. Either increase or decrease. Can I use a word called change? I hope you guys clear. Done. You can observe, guys, calculation part. As per net income approach, we have to figure out market value of the firm. Market value of the firm. So in a previous class, I said in FM only we done a valuation. What kind of valuation we done in FM? As per cost of capital. KE equals to D1 divided by P0 plus growth with growth model. I want P0. If I shuffle D1 divided by KE minus G, the P0 is known as valuation, value of the share. Are you clear? Here also I am doing valuation only. Valuation of market value totally. Market value of firm is nothing but organization valuation. As per definition, valuation of security, valuation of asset, valuation of business is known as a business valuation. So Inter itself we done a valuation, but we don't know at that time. Hope you guys clear? Now see, just a basic thing you need to learn, guys. What's your name, guy? Rajendra. Sit down. I took a 1 lakh rupees from the Rajendra. Forgot about the 1 lakh rupees. Guys, okay? So I am also forgotten. He also, his friend also forgotten. He only knows that he invested 1 lakh rupees in my company. But every month I paid 10,000 as a interest at the rate of 10%. 10,000 as a interest at the rate of 10%. My friend asked, how much amount you taken from that Rajendra? I forgot that, I don't know. Guys, clear? At that time he asked, can you tell me the transactions? I said, every month I am transferring 10,000 at the 10% rate of interest. Based on the two elements, he can easily calculate amount of investment. 10,000 divided by 10%. Hey, don't use calculator. 1 lakh rupee. Hope you guys clear? That's the logic we are using here. Okay. Now when it comes to income statement, sales minus variable cost, you will get a contribution, minus operating fixed cost, you will get a EBIT. That EBIT is known as operating profit, is also be known as business profit. Operating profit is also be known as business profit. Minus interest, I will get a EBT. That EBT is known as taxable profit. Minus tax, I will get EAT. This EAT is known as net profit. Net profit or net income. Terms are very, very important. They will not give EBT, PAT. They will give net income, net profit, that kind of words. Guys, okay? Now, less preference student, you will get EIESH. There is no alternate name. Equity shareholders earning. Okay, guys? Now, for valuation of the organization, in numerator, I need to take a 10,000. The 10,000 is nothing but profit of the company. How many profits we have? Contribution is a profit. EBIT is a profit. EBT is a profit. EAT is also profit. EISH also profit. What kind of profit I need to take for valuation? EBT only talks about tax point of view. EAT and EISH talks about only preference shares and equity shareholders point of view. Contribution talks about manufacturing point of view. The old EBIT talks about organization point of view. That's why operating profit or business profit. For 10,000 purpose, I need to take EBIT. Guys, clear? Divided with 10% is there, na? 10%. That is the overall cost of capital of the company. KE talks about only equity share, equity source. KD only talks about debt source. KP talks about only preferential. KO talks about entire organization. That's why instead of all those things, I consider KO. That is the logic behind EBIT divided by KO. Any doubt on this? Sure. Now, sir, EBIT KO is not given, sir. EBIT KO is not given, sir. Now we have another alternative. market value of firm equals to market value of equity plus market value of debt. Why? Because as per David Duran, we have only two sources of funds. Capitalizing of equity earnings, you will get a market value of equity. Capitalizing of interest, you will get a market value of debt. Sum of these two is known as organization value or market value of the firm. Clear? Done. Sir, how to calculate this market value of equity? With help of profits only, na? What about equity shareholders profit? EA, ESH. You have to do capitalize. EA, ESH divided by KO or KE? Yes, that's it. Plus market value of a debt. Interest divided by KD. Interest divided by KD. Don't by heart the formula, just understand the logic behind the formula. Hope you guys clear? This is a concept name called capitalization. Profit divided with a percentage, it will give you a value. Profit is not a value. If you divided with a rate percentage, that gives a value. That's a concept name called capitalization. In approaches, last class I discussed, there is an income approach. We have two methods: discounted cash flow method, earning capitalization method. Earning capitalization method. Clear? Done. Open illustration number 13 in practical book. So okay, share the books. Give one book to her. Stock is completed. I will show, no worry. Yeah. Illustration number 13. This is also taken from your intermediate itself. Two things you need to learn first. One is there is a names: levered firm, unlevered firm. Levered firm and unlevered firm. When it comes to levered firm, company have a risk funds. That is nothing but debt mix. In mix, debt included. That is called levered company. Equity plus debt is known as levered firm. If as per example, first existingly we have only equity sources. No risk, less risk comparing to debt. That is called unlevered firm. Less risk firms is known as unlevered firm. Second thing you have to learn, as per net income approach, one of the assumption, there is a no tax. There is a no tax. But when it comes to calculation point of view, they are not following that assumption. If tax rate is given, you can consider no issue. Hope you guys clear? For market value of equity, you want EA/ESH, na? How you get EA/ESH? You have to start from EBIT. And that EBIT, you have to reduce a tax, one of the parties' tax. In few problems, they are considering. In few problems, they are not considering your intermediate also. You have any doubt, rewrite the assumption. As per assumption, there is a no tax is the concept. But if question specifies, I can consider no issue. Guys, clear? That kind of clarity you have to maintain. Two solutions is there: without tax, with tax. Okay? So it depends upon the tax rate given in the question paper. If they give without assumption, you can take no issue. Why? Because without payment of tax, how I enjoy my profits? Government scold you. Government ఊరుకుంటుందా? కాబట్టి tax pay చేయాల్సిందే. That's why I told it is a 1930-20s. At that time, tax department, MNC culture is not there. That's that assumptions are works. In practical, it not works. Now see, A limited and S limited are the same risk class and similar in every aspect, sir. Every aspect except that A limited is a levered firm, S limited is an unlevered firm. What's the meaning for this? In a profit point of view, in cost point of view, and in a management point of view, employee point of view, sales point of view, similar, same. But A limited is a levered firm, S limited is a unlevered firm, but they don't have a same capital structure, they have a different capital structure. S limited is a 100% equity firm, A limited is a equity plus debt firm. That's the meaning of the point. Next, A limited has a 12 lakh debenture. A limited has a 12 lakh debenture worth carrying a 12% rate of interest. Can I take a post-tax KD or pre-tax KD? I said clearly, if the rate is given and tax rate is given, it is not a post-tax, it is a pre-tax. Unless they specify post-tax. వాడు post-tax అని చెప్తేనే post-tax. Just rate ఇచ్చేసి capital value చెప్పాడంటే it is a pre-tax. You have to convert that pre-tax into post-tax for calculation. దాని ఇంపార్టెన్స్ కూడా చెప్పా. నువ్వు కేడీ తప్పు చేసినావు అంటే కేఓ తప్పు అవుతుంది, కేఓ తప్పు అయిందంటే ప్రాబ్లం మొత్తం తప్పు అయిపోతే 7 మార్క్స్ పోతాయి. Now, both firm earns 18% before interest and a tax on the total assets of 22 lakhs. What's the meaning for this point? Profit 18% on 22 lakhs. That is nothing but EBIT. In our example, we directly taken here they said a calculation. Next, for A limited 18% into 22 lakhs. What about S limited? What about the S limited? Same only, not remaining part. Similar in all aspects. Similar in all aspects. Assuming tax rate 50%, the capitalization rate of 14% for the unlevered firm. Can I take it is a KO? That is nothing but KE for S limited. Why? Unlevered firm. Can I take same KE for A limited also? KE, not KO. Just KE. Similar in all aspects. Overall, KO I required for A limited, but KE point of view I can procure from the S limited because K are similar in all aspects. Okay, done. Calculate the value of both the firms using net income approach. So you already know direct formula is there, EBIT divided by KO. Indirect formula is there, market value of equity plus market value of debt. You have to decide which is suitable for this problem. EBIT is there, but KO is not there for A limited. KO is not there for K limited. Why? Because K is there, KD is there. K into weight of equity plus KD into weight of debt, you will get KO. That's why that first one is not possible. What about the second one? Market value of equity plus market value of debt. Yes, that one is possible. What about the EBIT for both the firms individually? First 22 lakh into 18%. How much? 3,96,000. So S limited is a unlevered firm, A limited is a levered firm. 3,96,000, 3,96,000. Less interest, huh? Less interest. How much? Capital value 12 lakhs, rate of interest 12%. Interest for all companies are only levered firm, only levered. 1,44,000. Next you will get a EBT 3,96,000, same because of no interest, but here it will be changed 2,52,000. Can I use a word called EBT? Now less tax rate is given 50%. How much? 1,98,000, 1,26,000. Sir, profits are same, sir. But here I paid a tax of rupees 1,98,000. Here I paid a tax of 1,26,000. Where I paid a more tax? Levered firm or unlevered firm? Why? Why? Levered firm don't have a tax advantage. That is called tax advantage. If you reduce, you will get it. Less profits, you can pay less tax. So EA, ESH or EAT. Sir, EAT and EASH both are not same, na? Yes, sir, if there is a preference dividend. But in this question, only two sources, equity and debt. That's why EAT is nothing but EASH. 1,98,000, 1,26,000. EA, ESH divided by KE. You get a market value of equity, yeah? Now KE given in the question directly, 14%. Same for two companies, 14%, 14%. Now tell me the market value of equity. 1,98,000 divided by 14%. 14,14,286. Here. What about the market value of equity for levered firm? 1,26,000 divided by 14%. Value? 9 lakhs. Can I conclude market value of equity is nothing but market value of firm? No. First, I can agree. Second, it not. Why? Because debt also there. You have to add debt for second case. That is nothing but levered case. Now, I said in the calculation part, interest divided by KD, right? But they already given, no need of calculation. They already given how much? 12 lakhs. Now add market value of a debt, 12 lakhs. Now you will get a market value of the firm. So 14,14,286, 21 lakhs. Guys, clear? Next. You can observe equity firm, how much is the market value? 14,14,286. Debt company. So which company have a more market value? 21 lakhs. Which one is the highest? That's why normal income approach is proving debt is a cheaper fund if you raise your market value increase comparing to equity firm. Practically also a lot of people are followed. The first person is Vijay Mallya. That is clear. That's why he have that much of debt. He was the best student of David Durant. Okay. So there is a next approach name called traditional approach. Traditional approach. So traditional approach is just a theoretical. There is no calculation part. Traditional approach saying that everything is advantage up to limit. After limit crosses, that advantage is converted into disadvantage. Hope you understand the sentence. Not only subject, life lo kuda panikostadi. Every advantage is a advantage up to limit. If limit crosses, it is a disadvantage. You can also use a word called vice versa. Every disadvantage is a disadvantage up to limit. If limit crosses, that converted into advantage. Okay. What the advantage set by David Durant? KD is a cheaper fund if you raise market value of the firm. Okay. In every time, I procure debt only. In every time, I procure debt only. ప్రతి తడవ నాకు రిక్వైర్మెంట్ వచ్చినప్పుడు అంతా డెట్ నుంచే తీసుకొస్తున్నా. ఆర్ యు క్లియర్? వాట్ ఇస్ ద రీజన్? బికాస్ ఆఫ్ డేవిడ్ డ్యూరాన్ సెడ్ డెట్ ఈస్ ఎ చీపర్ ఫండ్. బట్ యూ కెన్ అబ్జర్వ్ ది బ్యాక్గ్రౌండ్, అక్యుములేషన్ ఈస్ హ్యాపెనింగ్. 10%, 10%, 10%, 10%. At one point of time, that summation of 10% will increases the KE. Are you clear? Up to limit, okay. If limit crosses, debt also costly fund. If debt increases, KO also. If KO increases, market value of firm, what happen? Decreases. That is a traditional approach. See, initially KD is less than KE. It is an advantage. Due to that, if KO decreases, ultimately market value of the firm increases. If limit crosses, sum of the KD is greater than KE. Accumulation. If KD, it is a disadvantage because KD is increases, market value of the firm decreases. That's about relevance approaches. When it comes to the irrelevance approaches, we need to prove this. Market value of firm not change if capital structure changes. But previously we solved market value is changing. Now For the purpose, we have a two methods. One is net operating income approach and a Modigliani-Miller approach. Let us look this. This net operating income approach, net income relevance, net operating irrelevance. Don't confuse. Okay guys, clear? Now, మన దరిద్రం ఏంటంటే ఇది కూడా మనోడే చెప్పిండు, డేవిడ్ డురాంట్. He identified his mistakes, then he rectified. Guys, clear? So what is a mistake means? Just a common sense. Just a common sense. Debt is a cheaper fund. I agree. If I procure debt, I am creating a risk to my existing shareholders. Debt is a cheaper fund. If I procure, I am intentionally creating a risk to my existing shareholders. Yes or no? Okay. As an existing shareholder, are you bear risk without expectation? ఎక్స్ట్రా గెయిన్ ఏం లేకుండా రిస్క్ని నువ్వు అగ్రీ చేస్తావా? చేయవు కదా. దట్స్ ద టాపిక్ ఆఫ్ నెట్ ఆపరేటింగ్ ఇన్కమ్ అప్రోచ్. ఈజ్ ఆల్సో బీ నోన్ as set of theory. Is also be known as set of theory. Sir, what is a set of here? Due to debt fund, I have some advantage. Now, for the purpose of risk bearing of existing shareholders, I need to settle that advantages to them. ఈ చేతో తీసుకుని ఈ చేతో ఇచ్చేస్తున్నా. Yes or no, sir? 2% decreases in KD, that impacts 2% KO. Are you clear? Now, existing shareholders asking that new risks came into company, na? We will not continue with you, we will leave. Then I ask, when so ఎలా అయితే కంటిన్యూ అవుతావు, ఎంతైతే రిస్క్ వస్తుందో అంత బెనిఫిట్ని ఇంక్రీజ్ చేయి. రిస్క్ బెనిఫిట్ రెండు ప్యారల్ కదా. గైస్, క్లియరా? సో ఇప్పుడు నాకు రిస్క్ ఎంతైతే వస్తుందో అంత నువ్వు కానీ నాకు ఎక్స్పెక్టేషన్ పెంచావంటే నేను కంటిన్యూ అవుతా, లేదంటే వెళ్ళిపోతా ఇక్కడ నుంచి. సో నువ్వే నా బంధువేం కాదు కదా రిస్క్ తీసుకొని ఫ్రీగా ఉండడానికి. గైస్, క్లియర్? సో ఓకే, ఐ సెడ్ 2% అడ్వాంటేజ్ ఐ హ్యావ్ డ్యూ టు debt, I need to compensate to you. There is no advantage for the company. Guys, clear? 2% positive, 2% negative. The net impact is 0. KO remains constant. Due to 2% of advantage, KO decreases. Due to 2% of payment, KO increases. Plus 2 minus 2, KO what happened? Same, constant. If KO decreases, market value of firm increase. If KO decreases, market value of firm KO increases, market value of firm decreases. KO decreases, market value of firm increases. If KO constant, market value also constant. Net operating income, set of theory. Sure? Okay. There is no problematic part regarding to net operating income approach. But in exam, they are asking calculate market value of firm as per net operating income approach. Guys, clear? So you will get clarity after completion of the MM approach. Modigliani-Miller approach. Another few financial analysts came into the picture. They said, hey David Duran, what you said is right. The way of explanation is wrong. The way of explanation is wrong. Sir, what is right? KO constant, market value constant, right? You said the set of theory, those all, that are trash. The fact is, the company market value purely depends upon the investor mindset. Depends upon the investor mindset. If you continue with you, or new persons are came into the company, your market value of firm is increase. If your existing shareholders sir leave you, automatically your market value of firm is what happen? Decreases. That's the basic thing you missed in a net operating income approach. Hope you guys clear? That's why net operating income approach is a theoretical concept. MM approach is a practical concept. Practical concept. So there is a calculation part in MM approach. Instead of MM approach, sometimes they will give net operating income approach. No issue. Why? Because MM is a practical proof of net operating income approach. Hope you guys clear? Now here, without tax calculation is there, with the tax calculation is there. This is a very, very important calculation with the tax concept. Without tax, nothing but what are the topic we learned in net income approach. Market value of unlevered firm, market value of levered firm. Now see, I want market value of equity is nothing but market value of firm. Are you agree for this? Unlevered from point of view. Equity is nothing but total value only, na? Now the calculation is EAESH divided by KE. Now when it comes to market value of levered from point of view, market value of equity plus market value of debt. EAESH divided by KE plus interest divided by KD. There is no discussion of without tax. When it comes to with tax concept, step 1, first you have to find out market value of unlevered firm. See the logics. EBIT into 1 minus tax divided by KE. EBIT into 1 minus tax divided by KE. Now, as per this unlevered firm point of view, company have a EBIT something, less interest. Untada interest? Unlevered firm, man. With tax unlevered firm calculation. 0, no? Now you will get a EBIT is nothing but EBT. Can I use a word called instead of EBT, EBIT? Why? Because there is no interest. Okay. Less tax. Tax is there. Yes, it is a with tax model. Tax is there. You will get a PAT now. EAT or PAT. That's the logic I using here. EBIT into 1 minus tax. EBIT into 1 minus tax. Hope you guys clear? So this EAT is nothing but EAESH. In equation point of view, how it came? Just out of EBIT. Why? Because there is no interest. EBIT is nothing but EBT. If I pay tax, I will get a owner's earnings. Clear? Done. Step 2. I need to calculate market value of levered firm. Market value of levered firm with the tax concept. Without tax, you know, market value of equity plus market value of debt. Here calculation changes importantly. Market value of unlevered firm plus tax benefit. Market value of unlevered firm plus tax benefit. Now, market value of unlevered firm I already calculated in step 1. EBIT into 1 minus tax divided by KE plus the tax benefit means debt capital into tax rate. Debt capital into tax rate. Very, very important calculation. So as per tax benefit, I said only interest 1 minus tax. But David Duran said tax benefit means debt into tax rate for valuation. Tax into debt into tax rate is a valuation. Okay, now students are confusing here. This is not a market value of a debt. That is not a market value of a debt. That is a just calculation for levered firm process. Hope you understand. Guys, clear? So debt into tax rate is not a value of market value of debt. ఎందుకంటే మనకి ప్రీవియస్గా ఇంట్రెస్ట్ డివైడ్ బై కేడీని మార్కెట్ వాల్యూ ఆఫ్ డెట్ అనుకున్నాం. ఇక్కడ కూడా మనం అలానే ఈక్విటీ ప్లస్ డెట్ని ప్లస్ చేస్తున్నాం అనేసి దీని అందరూ మార్కెట్ వాల్యూ ఆఫ్ డెట్ అనుకుంటారు. ఇట్స్ నాట్ ఎ మార్కెట్ వాల్యూ ఆఫ్ డెట్. ఇట్స్ ఎ ప్రాసెస్ ఆఫ్ క్యాలిక్యులేటింగ్ మార్కెట్ వాల్యూ ఆఫ్ లివర్డ్ ఫర్మ్ అండర్ విత్ ట్యాక్స్ అప్రోచ్. క్లియర్? ఎనీ డౌట్ ఆన్ దిస్? Sure? That's it about the approach. See problem number 14. The following information is available about a Blue Kit Limited. So these all problems available in your ICMA source only. Final. Foundation is this question main gaadu. Concepts of foundation ante. Now, net operating income 15 lakhs. Tax rate 40%. Debt capital 20 lakhs. Interest rate on debt capital 8%. Capitalization rate applicable to debt free. means unlevered firm. The risk class to Wild Kit Limited belongings to how much? Can I take it is a KE? Guys, clear? Now, what should be the value of the firm according to Modigliani and Miller model? Now, you have to decide with tax or without tax. Tax rate is given. Now, which model it is? With tax. Are you okay? Now, market value of unlevered firm equals to EBIT. EASH is nothing but here EBIT into 1 minus tax. How we get EASH means this is the direct calculation. EBIT into 1 minus tax divided by KE. Now tell me the calculation. Net operating income. I said business profit is also be known as operating profit is also be known as EBIT. Now net operating income is nothing but what, sir? EBIT. So 15 lakhs into 0.6 divided by KE 0.125. Now tell me the value. 72 lakhs. This is the market value of unlevered firm in with tax model. There is a calculation for market value of levered firm. Market value of unlevered firm plus debt into tax rate. I already calculated market value of unlevered firm in step 1. How much? 72 lakhs. Plus debt how much? 20 lakhs into tax rate 40%. Now can I take 80 lakhs is 80 lakhs. That's way to calculate approach calculation. Yeah. Put a 5 star for illustration number 15. Put a 5 star for illustration number 15. Okay. Now you have to learn the concept name called arbitrage process. Arbitrage process. Observe detailingly. So points are very, very important. In approach, he said a practical approach of investor mindset. That proving purpose, they created a concept name called arbitrage process. Arbitrage process. The word arbitrage process means selling security at high price, purchase a security at a low price. Selling a security at a high price, purchase a security at a low price. And the process is there, sale and purchase. At that process, we can gain a profit. That profit is known as arbitrage profit. That is a problem number 15. Problem number 15. Guys, clear? Take an example to understand this arbitrage process. I have 2 company shares. One is V7 Vastra, another one is V7 Consultancy. V7 Consultancy is a levered firm. V7 Vastra is a unlevered firm. Sorry, Vastra is a levered firm. Consultancy is a unlevered firm. Hope you guys clear? Now, both share prices are 100 rupees only. Both the share prices 100 rupees. Now, one day there is an announcement. There is a fraudulent transaction in Vastra. There is a fraudulent transaction done by a management. That kind of breaking news happening in the market. Automatically tell me, investor of Vastra are continue with the Vastra or they will exit from the Vastra? Exit. If they are existing means automatically share price is what happen? Decreases. Decreases, it reaches to the 10 rupees now. Now another company share is there Consultancy. What price it is? 100. But I am not sold any shares in the Vastra. Why? Because I have a arbitrage knowledge. Why? Because okay, fraudulent transaction is happened. There is not a 100% proof, Tax department is there. CBI is there. They will investigate. After the conclusion, we can decide. Up to that, I feel it is a rumor. Hope you guys clear? I am not ready to sold. Hope you guys clear? But in this scenario, I have a 10 rupee share. I have a 100 rupee share. Now I am ready to sell this 100 rupee shares now. Are you clear? What are the amount I received if I sold 100 rupee shares? I will put that in Vastra. Automatically, if I investing in Vastra, what happened? The share price will be increases. Because of reduction, consultancy value will decrease. At one point of time, both are what happened? Same. 100 to decrease, 10, 10, 10, 10 decrease, 50. 10 to increasing, I am investing 10 rupees, 10 rupees. It reaches to the 50. Market value remains constant. It is the investor mindset. It is a investor mindset. Guys, clear? Now the point is arbitrage, guys. When you are doing a arbitrage, you have to take a two decisions or two assumptions. Two assumptions. Understand clearly. If you can shift from unlevered form to levered form, or you can also shift from levered form to unlevered form. You can do anything. But the point is, if you are shifting from unlevered form to levered form, you have to take a one assumption. How it possible? If I am shifting from unlevered form to levered form means I need to sold entire consultant is the unlevered form. Consult is the levered form. Vastra is the unlevered form. Okay, anyway, just understanding purpose only. Now I am shifting from unlevered form to levered form. It means previously I am not bearing any risk. Why? Because 100% equity. Now here is the assumption. If you sold your investment in unlevered form, you can put in debentures as well as equity. Debentures as well as equity. Why? Because ఎక్కడికి వెళ్తున్నావు నువ్వు లివర్డ్ ఫామ్లోకే కదా, అక్కడ ఏమేమి క్యాపిటల్స్ ఉంటాయి, ఈక్విటీ ప్లస్ డెట్ ఉంటాయి. యూ హ్యావ్ టు ఇన్వెస్ట్ ఆన్ బోత్. Guys, clear? Because of the investment, I will receive equity earnings as well as interest. Equity earnings as well as interest. Previously, I enjoyed only equity earnings. Totally. Now, I can enjoy equity plus interest. Are you clear now? That is assumption. Assumption number 2. I am shifting from levered form to unlevered. Levered form to unlevered. The point to be noted. Very, very important. Because of the existence in the levered form, I am bearing the risk now. Levered form లో ఉన్నాను కాబట్టి రిస్క్ బేర్ చేస్తున్నా. ఒక 5 yearsగా ఉన్నా నేను రిస్క్ బేర్ చేస్తున్నా. నాకు అలవాటు అయిపోయింది రిస్క్ బేర్ చేయడం. అవునా కదా? Now you are capable for risk bearing. Then you are shifting from levered form to unlevered form. Take a loan of amount outside. Why? Because you are capable for risk bearing na. ఇన్ని రోజులు బేర్ చేసావు, ఇంకా బేర్ చేయలేవా? That's what happened. Because of sale, I have some investment in levered firm. Because of outsource of fund, I have some more extra capital. Can I put in the unlevered firm? I will get a more ownership. More ownership, more return. Hope you guys clear? That are the two assumptions you have to follow. What is assumption number 1? If you are shifting from unlevered to levered, you need to invest all amounts on equity source as well as debt source. If you are shifting from levered firm to unlevered firm, you have to take a outside loan. For getting a more investment, if you put in the levered firm, you will get a more ownership. If there is a more ownership, more profit. Guys, clear? Now, illustration number 15. Put a 5 star. Consider the following information relating to two firms, RIL and SIL, which are similar to each other in all aspects excepting leverage. The word leverage means risk. One is a risk company, another one is a non-risk company. That is nothing but levered firm and unlevered firm. Now equity capital, 1,000 lakhs, 600 lakhs, debt 0, 400. Which one is a levered, which one is unlevered? So SIL is unlevered, RIL is unlevered. Okay, done, super. Net operating income 100 lakhs, 100 lakhs. Can I consider it as a EBIT? Okay. Now in this EBIT, in RIL, only equity shareholder has a right. Totally. Yes or no? No need to pay interest. Because tax rate also not specified in the question. No need to pay tax to government also. Guys, clear? That 100 rupees can enjoyed by shareholders. When it comes to this, 100 rupees can't enjoyed by shareholders. Why? Because debenture holders are also there. First, I have to settle interest. Guys, clear? So interest on debt given 20 rupees or 20 lakhs. Out of 100 lakhs, 20 lakhs I need to pay as an interest. The pending is there, na? 80 lakhs. This is the right to debenture holder. This is the right to equity shareholder. That's the point you have to understand properly. Clear? Next, market value of equity. market value of equity 2,000. Now my point is, market value of equity is nothing but market value from here. No. For real, okay. For SIL, not okay. Hope you understand clearly. Now see, market value of firm equals to here 2,000, no issue. But when come to here, 1,000 plus 400, 1,400. Next. Now, you are required to show how investor holding 10% stake in RIL can generate arbitrage profits by using personal leverage. Where he had a 10% of ownership, investor holding means he had a ownership in RIL. Are you clear? Generally, the shifting calculation I said now, the shifting calculation is possible with the help of return on equity. Return on equity. ఎక్కడైతే ఈక్విటీ ఎర్నింగ్స్ ఎక్కువ ఉంటాయో అక్కడికి షిఫ్ట్ అయిపోతాం ఆపోజిట్ కంపెనీ నుంచి. ఐ మీన్ లివర్డ్ నుంచి అన్లివర్డ్ కానీ అన్లివర్డ్ నుంచి లివర్డ్ కానీ. బట్ హియర్ డైరెక్ట్లీ సెడ్ ఐ హ్యావ్ ఏ స్టేక్ ఇన్ 10% ఇన్ RIL. Now where I need to shift? Common sense SIL. I am ready to sold 10% stake in RIL. That investment I put in one only option SIL. Can I use a word called unlevered form to levered form shift? Yes or no? No. But in a practicality, not like this. We have to calculate return on equity for two companies. Okay. Now RIL have a return on equity 12%. SIL have a return on equity 15%. Now I am shifting from RIL to SIL. Why? Because more returns are there. Clear? Done. First, sell your 10% stake. Sell your 10% stake. 10% into 2,000 or 10% into 1,000 is a question. 10,000 I need to sold my investments na. Equity capital is a capital and equity also be a capital. ఏది సేల్ చేయాలి? 10%. 1,000 మీద 10% సేల్ చేయాలా? 2,000 మీద 10% సేల్ చేయాలా? What sir? Why 2,000? Now here you have to understand the concept name called equity share capital and equity. The word equity share capital represent just equity share capital. The word equity represent equity share capital plus reserves and surpluses. Now you have a right to ask equity share capital profit as well as reserves and surplus profit. Why? Because at the end of the year they are not shared all profits. They keep some amount for the future contingencies. That is the reserves and surpluses. Adi kuda neeve in the sense ఓనర్ వే. గైస్ క్లియర్? ఇప్పుడు నీకు రైట్ దేని మీద ఉంటుంది? ఓన్లీ ఈక్విటీ షేర్ క్యాపిటల్ మీద ఉంటుందా? బోత్ ఈక్విటీ షేర్ క్యాపిటల్ ప్లస్ రిజర్వ్స్ అండ్ సర్ప్లస్ మీద ఉంటుందా? ఈక్విటీ మీద ఉంటుంది. సింపుల్గా చెప్పాలంటే ఇప్పుడు నువ్వు అమ్మాలి అంటే దేన్ని నమ్ముతావు? ఈక్విటీ నమ్ముతావు. ఈక్విటీ షేర్ క్యాపిటల్ ప్లస్ రిజర్వ్స్ అండ్ సర్ప్లస్ అంటే 2,000లో 10% అమ్మేస్తావు. నౌ 2,000 into 10% how much? 200 lakhs. If you sold your 10% stake, how much you will receive? 200 lakhs. Now you are investing the 200 lakhs in equity plus debt. Hope you guys clear? Now check the solution. Estimation of arbitrage profit if investor shifting from where to where? RIL to SIL. First you have to calculate existing profit. How much profit you are enjoying in RIL? 10 is the company profit. How much right you have? 10% only na. వాళ్ళు అందిస్తారు నీకు 10% ఓనర్షిప్ ఉంది కాబట్టి 10% షేర్ చేస్తారు. 100 into 10%, 10 lakhs. My existing profit is 10 lakhs. I need to compare na. Shifting is work or not works. That's why I am calculating existing profit. Next, amount in the hands of investor after selling his stake in RIL. How much stake you have? 10% on 2,000. How much you will receive? 200 lakhs. Next, you have to calculate if I invest the 200 lakhs in SIL, how much percentage of stake I will receive. Here I have 10%. If I invest 200 lakhs, I will receive something na. Either more than 10% or less than 10%. That's you need to figure out. How it possible means percentage of stake equals to investment amount divided by market value of SIL. Now what about the market value of SIL? Equity plus debt, very, very important. Out of flow student are considering only 1000. Last step is only market value of equity. But as per SIL, market value of firm equal to equity plus debt. That is nothing but 1400. That's why I noted that. Okay, divided by 1400. Now how much percentage you will receive? You will get 14.3%. Now where you are investing only in equity sources or equity plus debt? Equity plus debt. That's why you will get a 100 into 14.3%. Interest and equity, man. Now see the calculation. 100 minus 80. 20 rupees interest is there. First they will settle interest. Out of 20 lakhs, how much stake you have? 14.3% only now overall. Debt point of view as well as equity point of view. 14.3%. How much you will receive as an interest? 20 into 14.3%. 2.86 lakhs you will receive as a part of the interest. Next, equity earnings how much? 100? No, total earnings 100. Out of I paid interest 20. Now pending equity earnings. Out of 80 lakhs, I will receive 14.3% also. 11.44 lakhs. Now totally how much I am enjoying? 14.3%. Apply your common sense, sir. In denominator, what value I used? Only equity value or debt value? Both equity. It means this percentage can applicable on both or only single? Both. That's the calculation. Hope you guys clear? Because of shifting, how much profit I am earning here? 14.3 lakhs. Existingly? Extra? Arbitrage profit. Shifting is good or not? Yes. If I shift, I will earn 4.3 lakhs extra. Return on SIL, interest plus equity earnings, both. 14.3% on 20 lakhs, 14.3% on 80 lakhs. Now totally 143 lakhs. Arbitrage gain, 14.3 lakhs, 10 lakhs, not 143, it is a 14.3. Totally 4.3 lakh I am gaining as an arbitrage. Now case 2, guys. Show how an investor holding 10% stake in the equity of SIL. Now what is the option? He need to sold 10% stake in SIL. He need to shift it to RIL. No need of calculation here. Return on equity calculate చేయాల్సిన అవసరం లేదు. డైరెక్ట్గా స్పెసిఫిక్ చెప్పేసినాడు. నాకు సిల్లో 10% ఉంది, ఆర్బిట్రేజ్ ప్రాఫిట్ చెప్పు అంటే ఏం చెప్తా? ఏం చెప్పలేను. షిఫ్ట్ అయితేనే చెప్పగలుగుతా. సిల్లో స్టేక్ ఉందంటే ఎక్కడ షిఫ్ట్ అవ్వాలి? క్వశ్చన్లో ఉన్న ఆప్షన్ రిల్ ఒకటే. గైస్ ఓకేనా? But in the process of shifting from levered to unlevered, in process you have to take a outside loan. The risk equivalent to you are bearing in a levered firm. Guys, okay? Now, here also same steps. But you can observe the values are changed here. Show how an investor holding 10% stake in the equity of SIL can generate arbitrage profit assuming that market value of SIL is market value of SIL. Market value. They're directly saying that market value. Can I consider it as a 2000 as a market value? What is the breakdown for this market value? 400 already debt is there. Now what about the equity? 1600. Previously it is a 600,000 only equity. But now because of the specification, equity value changed to 1600. Guys, clear? Now the 10% stake you can't sold on 2000, you have to sold on 1600. Hope you understand. Now release 1000 instead of 2000, market value of firm changes to 1000. Next. First calculate existing return. How much percentage of stake you have? 10%. Are you enjoy interest and equity or only equity? Stake in ownership only. 10% stake in ownership. If you have a ownership means you have only equity shares. Then you can enjoy existingly equity earnings. It means you can enjoy 10% on 80 lakhs, not 100 lakhs. Stake means ownership. Hope you guys clear? Confuse అవ్వద్దు. Point to point clarify చేస్తున్నా. Now, how much existing profit? 8 lakhs. I hope you understand why 8 lakhs. Why? Because I'm only equity shareholder, not a debenture holder. In case 1, I am investing in equity plus debt. That's why I'm a debenture holder. Clear? Now, next, amount in hands of investor after selling his stake. How much? Equity into stake percentage. 2000 into 10% or 1600 into 10%? 1600 into 10%. Very, very important point. 160 lakhs. If I sold my stake, I will receive. Now, there is a point is there. What is the point? You can borrow outside funds. How much risk you are bearing? If you have a 10% equity shareholder means you are bearing also 10% risk related to the debt. Now, what is the company debt? 400 into 10%. That is a risk you are bearing till date. Are you clear? Now you can borrow 40 lakhs from outside. Now what is the total investment? 160 my own money, 40 lakhs outside money. Now 200 lakh is the total amount in your hand. Hope you guys clear? Next. Percentage of stake in RIL. Percentage of stake in RIL. Amount of investment please. 160 or 200? 200 because 160 own money plus 40 outside loan. Now 200 divided by what is the market value of RIL? Previously 2000. Now specification 1000 divided by 1000. How much stake I will receive? Previously I have only 10%. Now ownership 20% in RIL. Guys clear? Now return on RIL. కొత్తగా వచ్చాం కదా, అక్కడ ఎంత ప్రాఫిట్లు ఇస్తారు మనకి ఎంత ఓనర్షిప్ ఉంటే అంత ప్రాఫిట్ షేర్ చేస్తారు. ఎంత ఉంది? 20% ఉంది. ప్రాఫిట్స్ ఎంత ఉన్నాయి? 100. టోటల్ ఓనర్స్ ప్రాఫిట్ ఓన్లీనా? 100 into 20%. How much? I can't enjoy entire 20 lakh as my money. Why? We taken a 40 lakhs from outside. I need to pay interest. But interest rate is not specified in the question paper. But we can calculate easily. Amount of interest is there, 20 lakhs. Debt value is there, 400. 20 divided by 400 into 100, you will get interest percentage. How much percentage? 5%. Are you clear? In 40 lakhs, you have to pay 5% interest. What is the value? 2 lakhs. Now, 20 lakh I am earning newly. Out of that, I need to pay interest for outside money. After get, I enjoy only 18 lakhs. Existingly, how much I am enjoying? 8 lakhs. Because of shift, how much I am earning? Now, what is the extra? 10 or 8? 10 lakhs. That is called arbitrage profit. Now tell me, shifting is better or not? Yes, that is called arbitrage profit calculation. Any doubt on this? Sure. So I recorded assumptions here. When investor shifting from unlevered form to levered form, investor need to invest amount on both equity and debt of levered form. Next, when investor shifting from levered form to unlevered form, investor can take a loan from outside. He hold a capable of risk bearing. Any doubt on this? Sure. So next concept, all stuff in basic chapter only, sir. Next chapters నుంచి ఫ్లోలో వెళ్ళిపోతాయి. సో అందరూ ఏం ఫీల్ అవుతారంటే వీళ్ళు బేసిక్సే చెప్పుకుంటున్నారు అనే ఫీలింగ్ ఉంటుంది. నీకు ఎంత స్ట్రాంగ్ ఆఫ్ బేసిక్స్ ఉంటే అంత స్ట్రాంగ్ ప్రాబ్లమ్స్ చేయొచ్చు మనం. నీకు చాప్టర్ 6, 7 చేసేటప్పుడు అర్థమవుతుంది ఎందుకు ఇవంతా మనం అన్నిసార్లు మాట్లాడుకున్నాం అనేది. ఓకేనా? సో వాల్యుయేషన్ ఆఫ్ షేర్స్ బేస్డ్ ఆన్ PE మల్టిపుల్ అండ్ Gordon's model. Up to now we calculated PE based on dividend growth model, earning growth model. Yes or no? Conversion formula of KE. Now when it come to here, PE ratio equals to MPS divided by EPS. MPS divided by EPS. The full form for PE ratio, price earning ratio. The price represent market price per share, earning represent earning per share. You can also calculate in total point of view market value of firm divided by EAESH. Both are give same answers. Why? Because MPS divided by EPS expresses per share. Market value of firm divided by EASS talks about total point of view. But ultimate answer is same only, na? Okay. This answer expresses in times, sir. 5 times, 10 times, 12 times, 11 times. Okay, na? Now, this is a PE ratio we are using for share purchasing point time in reality. A company shares konali ane analysis point of view, in the technical analysis, we are using a PE ratio. Okay, the PE ratio expresses decision in 2 point of view. One is company point of view, another one is investor point of view. First understand what is a PE ratio, then we can take a decision based on company and investor. Now when it comes to PE ratio expresses for 1 rupee of earning of my company, how much my market value is impacting. 1 రూపాయి నా కంపెనీ ఎర్న్ చేస్తుంటే ప్రాఫిట్, దాన్ని బేస్ చేసుకుని నా మార్కెట్ వాల్యూ ఎంత చేంజ్ అవుతుంది అని చెప్పేదాన్ని PE రేషియో అంటారు. క్లియరా? ఇఫ్ మై ఎర్నింగ్స్ ఆర్ మోర్, ఆటోమేటిక్లీ మై మార్కెట్ వాల్యూస్ ఆల్సో ఇంపాక్టింగ్ మోర్, నాట్ ఇంక్రీజ్, ఇంపాక్టింగ్ మోర్. ఇఫ్ EASH is less, my market value impacting less. But clear point to be understand. Now take an example to understand. MRF company is there, na? CET. Both are which industry? Tire manufacturing industry. Now PE ratio of MRF company 40 times, CET is 28 times. 40 times, 28 times. Now I'll give a clarity. For every 1 rupee of earning, my company market increases by 40 times. Company point of view. If my company earns 1 rupee, my market value impact how many times? 40 times. When it comes to CET point of view, if my company earns 1 rupee of earning, my company market value impacted by 28 times. Now tell me company point of view, are you expecting more market value or less market value? That's why companies are preferring 40 times. Companies are preferring 40 times. Now let us check in the investor point of view. For every 1 rupee of earnings in MRF, I need to pay more 40 times for purchasing that share. For every 1 rupee of earnings in CET, I need to pay just 28 times for a market. Now, investor point of view, which one is the best one? CET. Guys, clear? Investor point of view, they are expecting less PE ratio. Companies are expecting more PE ratio, MCQ. Okay, guys? Clear? Now, what is the calculation part of PE ratio? MPS divided by EPS. Now, see the logic. PE ratio equals to MPS divided by EPS. For example, EPS is 2 rupees for MRF company. Can I find, with help of these two elements, can figure out the MPS? Yes. PE ratio 40 times. I don't know MPS, but I know EPS. Now, what is the MPS? 40 into 2, 80 rupees. 80 rupees. That's said in formula point of view. MPS equals to PE ratio into EPS. Any doubt on this? Sure? Okay. Next, Gordon's dividend model. Very, very important. Put a 5-star for that. This is a base for chapter 6, discounted cash flow method. Okay. When it comes to the Gordon model, Forecasting dividend is there, perpetual dividend is there. Forecasting dividend, perpetual dividend. So what is mean for forecasting and what is meant by perpetual? Ekko burro bettakandi, simple. If time period is, either 5 years or 10 years or 20 years, that is called forecasting period. Okay, if you don't know about the n number of years, you don't know about the n equal to infinity years, that is called perpetual dividend. Perpetual dividend. Now if question specifies both n number of years and infinity period, sum of these two is known as a P0 calculation as per Gordon's dividend model. Guys, clear? If they are not provided perpetual information, I can't figure out the perpetual value per share. That's why the forecasted demand calculation only is known as P0 as per Gordon's model. If both gives, consider both calculation. If not, both information is not give, find out only what are the information they provided. Any doubt on this? Sure? Okay, done. Let us check here. So forecasting period means noun period. Example, either 5 years, 10 years, 20 years. Simply, I know n. Now, with growth, without growth. With growth, without growth. That is nothing but for example, take an example to understand. EPS given in the question 12 rupees. Payout ratio. What does it mean for payout ratio? Dividend payout ratio. Company earns 12 rupees per share. They are not sharing entire 12 rupees. They are paying only 50%. That is called dividend per share equal to 6 rupees. What about the remaining 6 rupees? Returned earnings. That's we are using for business purpose reserves and surpluses. Capital. Okay. Now, number of years equal to 5 years. Now you have to figure out V0. What is the meaning for V0? Value per share or price per share. Okay. Now my point is, V0 equals to year 1 P0 plus year 2 P0 plus year 3 P0. Just example, 3 years only. Very clear, sir? Now, sir, by using dividend, now D1, D2 plus D3. D1 plus D2 plus D3. Now this D1 receive when? 0 year, 0 period or 365th day. First day or 365th day. Last day of the year. But you are taking a decision today. Today value, year ending value both are same. Set by time value of money concept. Time value of money concept. So if you are taking a decision today, you have to bring that future dividend to present value. That's why D1 into present value factor for first year, present value factor second year, present value factor third year. Now sum of present value dividend is known as a value per share. Any doubt on this? Guys, clear? Sure? Next. When it come to, if they are specifying a growth rate, you have to add growth for every year. It means D1 equal to 6 rupees. They said 10% growth. It means D0 equal to 6 rupees. They said growth equals to 10%. Now I can't take D0 for the year 1. I need to take D1. How I get a D1 means D0 into 1 plus growth. D2, D0 into 1 plus growth square over D1 into 1 plus growth. Both are possible. Are you clear now? Now, how you get a D3? D0 into 1 plus growth cube over R. Already I have a D2 value now. I need to add 1 year growth only. D2 value into 1 plus growth. That is the implication you have to apply if they provides growth rate. Guys, clear? Forecasting point of view calculation completed. Can I talk with the perpetual? The perpetual calculation is nothing but without growth, with growth. Without growth, P naught equals to D expected dividend. Expected dividend divided by R. That R is nothing but KO. నేమ్ చేంజ్ అవుతుంది ఇక్కడ నుంచి. ఇప్పటివరకు మనం క్యాపిటలైజ్ విత్ కేఓ చేసాం కదా. హియర్ ఆన్వర్డ్స్ వీఆర్ యూజింగ్ వర్డ్ కాల్ ఆర్, రిక్వైర్డ్ రేట్ ఆఫ్ రిటర్న్ ఆర్ కాస్ట్ ఆఫ్ క్యాపిటల్ ఆర్ వెయిటెడ్ యావరేజ్ కాస్ట్ ఆఫ్ క్యాపిటల్. ఆర్ యూ క్లియర్? ఇఫ్ దెర్ ఇస్ ఏ విత్ గ్రోత్, P naught equals to expected dividend divided by R minus G. R minus G. Now the real concept starts now. Sir, what is meant by expected dividend? What is meant by expected dividend? Please continue with the above example. I have a proper information up to 3 years. Now I don't have a proper information after 3 years to infinity. But infinity period growth I know. Infinity growth I know. G equals to 4%. What is the G equal to 4%? Already growth rate is there, not 10%. The growth of 10% is known as forecasting growth, short-term growth. The growth of 4% is there, na? That is a long-term growth or perpetual growth. Hope you guys clear? If they give this kind of names, there is a perpetual value calculations also there. Are you clear? Now, this only na with growth model. Okay. Now, what is the expected dividend for this calculation? I end up with third year. I end up with third year. What is the third year value? D3 into D2 into 1 plus growth. For example, the value is 7.2. Okay. That I need to consider as a current year. D3 value into 1 plus short-term growth or long-term growth? Long-term growth. So D3 is a current value. I want expected value. It means future value. How I get a future value? If I add growth, what growth? Short-term or long-term? Because of long-term calculation. Divided by R minus G. What G? R minus G. Two growth rates is there. What growth I have to consider? Long-term. I am capitalizing for what? Long-term. That's why small g. Are you clear? Now my point. This present value or future value? Future value. Which year future? Infinity year future. Yes or no, na? I need to bring that infinity year to present value. There is no present value factor for infinity years. పాయింట్ అర్థమైందా? దీన్ని నువ్వు ప్రజెంట్లో తీసుకొని రావాలి. ఒక ఇయర్ ఉంటేనే ఆ ఇయర్ ఫ్యాక్టర్ వాల్యూతో మల్టిప్లై చేస్తే అది ప్రజెంట్లోకి వస్తుంది. ఇక్కడ ఇయర్ లేదు, ఇయర్ ఇన్ఫినిటీ, కాబట్టి ప్రజెంట్ వాల్యూ ఫ్యాక్టర్ కూడా ఉండదు. బట్ when for the calculation point of view, we are using a logic where this calculation is, we are computing which year ending? Third year ending, fourth year beginning. Third year ending, fourth year beginning. That's why here you have to apply present value factor of R percentage third year. Hope you understand. For infinity, there is a no present value factor calculation, but we need to bring that future value to present. దానికి లాజిక్ ఏంటంటే ఆ క్యాలిక్యులేషన్ ఏ ఇయర్ లాస్ట్లో జరుగుతుంది? ఫోర్త్ ఇయర్ లాస్ట్లోనా, థర్డ్ ఇయర్ లాస్ట్లోనా? ఫోర్త్ ఇయర్ బిగినింగ్ నుంచి ఇన్ఫినిటీకి, అంటే ఫోర్త్ ఇయర్ బిగినింగ్ లాస్ట్ ఇయర్ అనొచ్చా? ఫోర్త్ ఇయర్ లాస్ట్ అనకూడదు, ఏమనాలి? థర్డ్ ఇయర్ లాస్ట్ అనాలి. కాబట్టి నువ్వు ఏ ఫ్యాక్టర్ వాడాలి? థర్డ్ ఇయర్ ఫ్యాక్టర్ వాల్యూ వాడాలి. దట్స్ బ్రింగ్ ఫ్యూచర్ వాల్యూ టు ప్రజెంట్. వెరీ వెరీ ఇంపార్టెంట్ పాయింట్ సార్. డిస్కౌంటెడ్ క్యాష్ ఫ్లో మెథడ్ మొత్తం ఇదే సార్. హియర్ ఇస్ అ బేస్ పాయింట్. Okay, the only thing you have to consider, the end of forecasting year is a current dividend for perpetual calculation. You have to add long term growth divided with R minus G, present value factor, which year ending you are calculating. Okay, when it comes to discounted cash flow method, instead of dividend we are using cash flows. Dividend place lo em pedtam, cash flow pedtam, remaining ani same. Clear? Done. Open illustration number 9. Open illustration number 9. This is 7, 8 are the basic things. Read. Assume that the shareholders of Alka hold the shares of A Limited and infinity period. Infinity period. A Limited matured company giving a constant dividend 3 rupees. With growth or without growth? Constant dividend means what? Without growth. Simple. D divided by R. Perpetual calculation. Now R is given 12%. Now P naught equals to 3 divided by 12%. Answer? 25 per share. Extending of the above, they provided a growth rate of 6%. Now V naught equals to expected dividend divided by R minus G. Now you have to check the word. The given dividend is expected or not. Sometimes they will use a name called expected dividend, next year dividend, estimated dividend. If the words are given, that are just given. If the words are not given, it is a current D naught. Okay. For a decision, what value we are using? D naught or D1? D1. గుర్తుపెట్టేసుకో ఇప్పటి నుంచి గ్రోత్ కనపడిందంటే వాడు ఇచ్చిన వాల్యూ డి నాట్, దానికి గ్రోత్ యాడ్ చేస్తేనే ప్రాబ్లం స్టార్ట్ అవ్వాలి. అది క్లియర్? నువ్వు అలా కాకుండా ఇచ్చిన వాల్యూని D1 అని తీసుకునేసి నెక్స్ట్ ఇయర్ నుంచి గ్రోత్ యాడ్ చేసుకుంటూ వెళ్ళావంటే 7 మార్క్స్ లూజ్ అయిపోతావు ఆఫ్టర్ కంప్లీషన్ ఆఫ్ ది టోటల్ క్యాలిక్యులేషన్. అది క్లియర్? ఓకే, డన్. So growth impacts more in a discounted cash flow method. So what is the expected dividend? The Alka hopes that A will give a dividend 3 per share next year. Because of the word next year, the given dividend is a expected dividend itself. 3 divided by 0.12 minus 0.06. Answer? 50. Come to illustration number 9. Unity Partners is expected to have an earning in 10 years of 12 per share. Dividend payout ratio 50%. What is the DPS? 6 rupees. Required return or 11%. At the time, the dividend growth rate is expected to fall 4% in perpetuity. It means they are not specifying the short-term growth. They are only specifying long-term growth. They specifies follow the long-term growth principles only. Next, and the trailing. Forget about the word trailing. Just focus on the PE. I will give a clarity in next chapter about the trailing. So the PE ratio of forecasted to be 8 times. అది సెంటెన్స్ ఫామ్లో ఉంది, మనకి గుర్తు కూడా రాదు. 8 times. Earning, estimate the terminal value at the end of the year using Gordon's growth model, PE ratio. You know how to calculate as per Gordon's model, V naught calculation, PE ratio, V naught calculation. I can easily say PE multiple point of view. EPS into PE ratio. EPS already given in the question, 12 rupees. Expected earnings 10 years 12 per share. Per share 12 rupees. 12 into 8 times. Answer? What ma? 96. What about the Gordon's point of view? There is no forecasting. There is only terminal calculation. With growth or without growth? Yeah, with growth only na. Now V naught as per perpetual with growth concept. Expected dividend divided by R minus G. Now what is the expected dividend? It is not expected dividend. It is a current year dividend. Guys, clear? I want expected dividend. Now how I convert it? 6 into 1 plus 0.04 divided by 0.11 minus 0.04. 6 point, sorry, 89 అంతే. అదే కదా ఇక్కడ నేను చెప్పింది, ఇక్కడ చూడు. In problem number 7, read, there is a no growth. They said constant dividend. Every year you will receive only 3 rupees. What is the meaning for that? There is a no growth concept. Sometimes they will not specify the growth rate, guys, but they will give a clues. 10 years back 3 rupees, now it is 5.6 rupees. Growth is there, not there? There. Now at that time you have to calculate growth as a working note. Are you clear? Illustration number 10. Put a 3 star. This is a workbook question. I said in previous class, in new material there are showed a huge lot of problems with the new models. This is a workbook question as per your ICMA sources. The terminal value give a forecast earning. A smart limited is deciding whether to pay out rupees 400 lakhs in excess cash in the form of an extra dividend. I'm not getting that point. What about that 4 lakhs cash? Cash of dividend. Yeah, they paid as a dividend. Guys, clear? It is called amount of total dividend. Amount of dividend they paid in the form of cash. Next. Current earning, or can I use a word called EPS? This 4 lakh is known as DPS or a dividend? Dividend. The stock sells for 20 rupees. MPS. The market value balance sheet currently is as follows. Assets is there, liabilities is there. Next, when it comes to the calculate, the two alternatives in the term of effect on the price per share of stock as well as EPS and the PE ratio. Now they are asking two alternative MPS calculation. What are the two alternatives you have? With the help of DPS you can figure out V0. With the help of PE ratio also you can figure out V0 or P0. That are the two alternatives we have. Are you agree or not? Okay, done. Which alternative is a better decision for the company? Now, if I want to do a valuation DPS point of view, I want dividend per share, but I have only total dividend. Can I possible to convert total dividend to DPS? How? Amount of dividend divided by number of shares. How we get a number of shares? Amount of equity capital divided by face value. Hope you guys clear? Sir, there is a no face value, no? Assumption 10 rupees is a face value. General assumption. Are you okay now? That's problem is completed. See, given information, this one, 9th one, 10th one. Estimation of value per share for two alternatives under PE multiple. EPS 2 rupees, MPS 20 rupees. What about the PE ratio? MPS divided by EPS. So change here, I recorded MPS divided by MPS. How many times? Okay. Then calculate number of equity shares. Equity divided by, sorry, don't consider a face value. Market price is given, current market price. Guys, okay? If we don't have a market price information, at that time we can take an assumption face value equal to 10 rupees. Okay, the basic point I missed, sir. So if they specify the current market price, number of shares equal to equity value divided by market price. Put a star at that point. Now please tell me the equity value. ఇదే చాలా మందిని ఇబ్బంది పెట్టే పాయింట్. మార్కెట్ ప్రైస్ ఉన్నా సరే అవుట్ ఆఫ్ ఫ్లోలో వెళ్ళిపోతారు, డివైడ్ బై ఫేస్ వాల్యూ తీసేసుకొని. ఆన్సర్ ఏమో రాంగ్. గైస్ క్లియర్? మార్కెట్ ప్రైస్ ఉంది అంటే వీ హ్యావ్ టు ఫిగర్ అవుట్ నెంబర్ ఆఫ్ షేర్స్ విత్ హెల్ప్ ఆఫ్ మార్కెట్ ప్రైస్ ఓన్లీ. ఆర్ యూ క్లియర్? నౌ 85,000 షేర్స్, 17 lakh divided by 20 rupees, 85,000 shares. Now as per PE ratio remains constant for both alternatives. Now if pays 4 lakh as a dividend, 4 lakh as a dividend. Now MPS equals to EPS into PE ratio is one of the concept, 20 rupees. What they said is nothing but that one only. Why? Because PE ratio created with help of 20 rupees only. They're saying that their buyback. Check the alternative. The market value balance sheet currently the firm of an extra dividend or go in for a share repurchase. The word share repurchase is nothing but buyback. Are you clear? If buyback, your number of shares will be increase or decrease? Number of shares will increase or decrease? Decreases. If you issue, it will increase. If it buyback, you will reduce the number of shares. Basic point. నీ షేర్స్ నువ్వే కొనుక్కుంటున్నావు అంటే ఎలిమినేట్ చేస్తున్నావు. అప్పుడు నీ దగ్గర నెంబర్ ఆఫ్ షేర్స్ ఏమవుతాయి? డిక్రీజ్ అయిపోతాయి. ఇష్యూ చేస్తున్నావు అంటే కొత్తగా క్యాపిటల్ డబ్బులు తెచ్చుకున్నాం, షేర్స్ని పెంచాం కాబట్టి ఇట్ విల్ బి ఇంక్రీజెస్ టు ఎగ్జిస్టింగ్ షేర్స్. ఆర్ యు గైస్ క్లియర్? At the time of issue, your shares will be increased. At the time of repurchase, your shares will be decreased. Now, number of shares for buyback. The 4 lakh is the only option. Either pay as a dividend or used for buyback. Now, how many shares can I buy back with the 20 rupees price? 4 lakh divided by 20, 20,000. Now, total number of shares will be decreases now. Existingly, I have 85,000. Now I repurchase 20,000. Now what about the after buyback number of shares? 65,000. 65,000. Now because of 65,000 shares, can I use the EPS will be changed? EPS will be changed. Now ESH divided by number of shares. EPS I already what about the EPS per share? 2 rupees. Now the total shares are total shares 85,000, but I want only for buyback shares after buyback. Now the EPS is 2.61. Point to be noted. EPS I am calculating for total number of shares. That is nothing but for 85,000 shares of company. 2 rupees each into 85,000 shares. But I want after buyback I have only 65,000 shares. Now that is called new EPS. నీ దగ్గర కొత్త ఈఏఈఎస్హెచ్ ఉందనుకో, అప్పుడు ఏం చేస్తావు? న్యూ ఈఏఈఎస్హెచ్ డివైడెడ్ బై న్యూ షేర్స్. దట్ ఈస్ నథింగ్ బట్ ఆఫ్టర్ బైబ్యాక్ అని రాసుకుంటావు. బట్ నీ దగ్గర రెండు ఈఏఈఎస్హెచ్లు ఒకటే, న్యూ ఈఏఈఎస్హెచ్, ఓల్డ్ ఈఏఈఎస్హెచ్. ఎందుకంటే బైబ్యాక్ వల్ల నీ ఎర్నింగ్స్ ఏం మారట్లా కాబట్టి ఎగ్జిస్టింగ్ ఎర్నింగ్స్ ఏవైతే ఉన్నాయో అవే ఆఫ్టర్ బైబ్యాక్ తర్వాత కూడా కంటిన్యూ అవుతాయి. అప్పుడు నేను ఎగ్జిస్టింగ్ ఎర్నింగ్స్ ఎలా ఫైండ్ అవుట్ చేస్తా? ఈపీఎస్ ఇంటూ నంబర్ ఆఫ్ షేర్స్. నా వాట్ నెంబర్ ఆఫ్ షేర్స్ ఐ హ్యావ్? 85,000 number of shares I have. Are you clear? MPS also changes now. Why? If EPS is 2 rupees, MPS is 20. Now EPS changes to 2.61. MPS also change 2 into 10 times. Why? Because there is no explanation about the PE ratio. I am taking assumption PE ratio remains constant. Now 26.1. Case B, they are asking a decision. Accept alternative 2. Buyback of shares because it will give a higher market price, that is 26.1 per share. You have to say decision on company point of view. Company ki high market price kavala, low market price kavala. Are you hoping guys clear? This is also new point. Only this point they can create for MCQ, sir. Are you clear? Done? Come to illustration number 11.
Illustration number 11. The following information of Achal Limited are given. Okay. Now the point here, this question asked in December 23 for 7 marks. It's a basic question. As per case 1, when it comes to case 2, it is a difficult question. అందరూ కేస్ 1 ఫినిష్ చేసుకుని ఒక 4 మార్క్స్ 3 మార్క్స్ వస్తాయి అనుకుంటారు. 2 మార్క్స్ వేస్తాడేమో అంతే. మొత్తం క్యాలిక్యులేషన్ కేస్ 2లో ఉంది. Guys, clear? In case 1, you can expect only 1 or 2 marks, basic calculation. The entire thing in the case 2. Okay? Put a 5 star. Hardly you will get a 4 to 5 questions only in this chapter 1. For exam point of view, that's I specified. Remaining all the basic knowledge for future purpose, future chapters purpose. The following information of A Limited are given. Current dividend, D1 or D0? What is required for calculation? What required for calculation? Expected dividend is required. When, if there is a growth. If there is a no growth, D1 is same, D1 also same. Discount rate 10.5%. Growth rate 2%. Based on the above information, Achal Limited, you are required to calculate present value of stock of Achal Limited. Stock of Achal Limited is nothing but V0 as per with growth model. D1 divided by R minus G. What about the D1? 2.5 into 1 plus 0.02 divided by 0.105 minus 0.02. Tell me the answer. 2.5 into 2% growth, add. .5 into 1.02. Answer. Tell me the numerator, man, first. Numerator. 2.5 ma. 2.5 into 1.02. 2.5 divided by 0.0805. 10.5 minus 2. Now tell me the direct answer. 2.5 divided by 0.0805. Rupees 30, yeah? Yeah. Case 1 answer completed. 3 marks పడిపోతాయి అనుకుంటా. Case 2. Assess stock of Achal Limited whether it is overvalued if the stock price is 35, ROE is 9% and EPS is 2.25. Support your answer with complete workings. దీనికి ఇస్తారు సార్ మీకు 5 మార్క్స్. ఒకవేళ సొల్యూషన్ ఓపెన్ చేసి చూడండి. ప్లీజ్ ఓపెన్ ద సొల్యూషన్. In case 2, how many cases is there? A, B. అంతుందా ఈ క్వశ్చన్లో? అందుకే మిమ్మల్ని ఫైనల్ స్టూడెంట్స్ అనేది. Hope you guys clear? Here they provided actual market price of 35 rupees. Are you clear? They're asking you have to calculate P0. Compare with that. Tell me that price is over or less. Ikkada return on equity is there. EPS is there. Based on these two, you need to figure out possibility of P0 calculation. That's your basic knowledge they are checking. నీకు ఎంత నాలెడ్జ్ ఉందో తెలిసిపోద్ది ఆ ప్రాబ్లంలో. With help of return on equity, with help of EPS, you have to calculate P0. ఎన్ని పాసిబిలిటీస్ ఉంటే అన్ని పాసిబిలిటీస్లో. గైస్ క్లియర్? Now another point you have to understand. What the price they given is 35 is actual price. What you calculation involved price is there na, that is called expected price. Are you clear? You always compare expected price versus actual price. నువ్వు క్యాలిక్యులేషన్లో క్యాలిక్యులేట్ చేసేది వచ్చే ఆన్సర్ ఎక్స్పెక్టెడ్ ప్రైస్, దాంతో వాడు ఇచ్చిన వాల్యూని కంపేర్ చేయాలి ఆల్వేస్. క్లియర్? ఫర్ ఎగ్జాంపుల్, మై ఎక్స్పెక్టెడ్ ప్రైస్ I calculated, the answer is 35 rupees. What is the meaning for the 35 rupees? After calculation, I conclude that I can invest at the on share of rupees 35. I can take that much of call. నేను క్యాలిక్యులేట్ చేసిన వచ్చిన ఆన్సర్ 35 ఏదైతే ఉందో ఆ షేర్ని నేను ఎంతవరకు కొనుక్కోవచ్చు, 35 రూపీస్ ఉన్నంత వరకు కొనుక్కోవచ్చు. దట్స్ ద మీనింగ్. ఐ కెన్ ఇన్వెస్ట్ అప్ టు 35 రూపీస్. బట్ వాట్ ఈస్ ద రియాలిటీ వాల్యూ? 35. Are you ready to purchase? It is not a overvalued, not a undervalued. Now my calculation P0 expresses 30 rupees. I can invest up to only 30 rupees, but in a market it is a 35. 5 rupees extra, that is called overvalued. Now I calculated, my answer is 40. I am ready to invest up to 40 rupees. In market it is just 35 rupees, undervalued. In which scenario are you purchasing? Overvalue time or undervalue time? Undervalue time. That is they're expecting. You have to calculate all those things. నేనైతే రఫ్గా చెప్పేసాను. అవి ఇచ్చిన రిటర్న్ ఆన్ ఈక్విటీ అండ్ ఈపీఎస్ని బేస్ చేసుకొని నువ్వు చెప్పాలి. నౌ సి, I get one idea. EPS point of view, I have two alternatives. One is EPS with growth, KE as per EPS. KE as per EPS, with growth or without growth. In with growth, E1 divided by P0 plus growth. If I shuffle that, I will get a P0. KE as per earnings model with growth, expected EPS divided by P0 plus growth. Are you clear? Now if I shuffle this, P0 equals to E1 divided by KE minus growth. This is a one possibility I have. Yes or no? Okay. EPS is there. If I multiply with PE ratio, I get another P0. Yes or no? Na? ఆ లెవెల్ ఆఫ్ నాలెడ్జ్ కావాలి నీకు ఆ ప్రాబ్లం చేయాలంటే. Sir, how you decide these two means? Based on availability of the information. Are you clear? Now, sir, where is the PE ratio information, sir? Where is the PE ratio information? Where is the PE ratio information? Now see this. What's the formula for PE ratio, guys? I said in total point of view also. Market value of firm divided by, instead of firm, take equity. Market value of equity divided by EA, ESH. Are you clear? I hope I'm considering you know the return on equity formula as per ratio analysis of FM. EA ESH divided by equity. EA ESH divided by equity. Guys, clear? 1 divided by return on equity. How it converted? 1 divided by EA ESH divided by equity. Now the actual step is, it will be up, it come to up, it will be denominator, right? Equity divided by EA ESH. Now what is the formula of PE ratio? Market value of equity divided by EA ESH. Can I use PE ratio is nothing but 1 divided by return on equity? That's a concept. That's the subject. Guys, clear? Now, what is the return on equity? Now, what is the return on equity? 1 divided by 9%, 0.09. You will get 11.1111 times. Now, what about the EPS? What about the EPS? In question, they specified, na? 2.25. Answer? 11.11 into 2.25. I am ready to invest up to 25 rupees. But what about the actual price? Undervalued or overvalued? Any doubt on this? The only new point is PE ratio is nothing but 1 divided by return on equity. This is the logic behind that calculation. Okay, guys. Next, come to the second alternative. I already said earning growth model. Earning growth model. Now see. EPS is there. 2.25. Growth rate. Not given in the case 2, but given for overall. 2% is the growth rate as per question. Okay? 2%. Now when it comes to MPS equals to expected dividend into 1 plus growth. I mean current earnings into 1 plus growth divided by R minus G. Now what is the current EPS? 2.25 into 2%. 1.02 multiply. So what is the numerator? 2.295 divided by R minus G. Growth rate I know. Growth rate I know. What about R? 2 is there. In above you taken 10.5% as a cost of capital. Here I have a doubt. Here R is there. You saying that R return on equity also R. Guys, clear? In first calculation, case 1 calculation is there na? You are not used ROE. Sir, okay. Sir, అప్పటికి నాకు ROE తెలియదు సార్. అప్ టు కేస్ 1 నాకు ఇన్ఫర్మేషన్ లేదు. కాబట్టి KO ఈజ్ నథింగ్ బట్ R అనుకున్నా. బట్ ఇప్పుడు నాకు రెండు తెలుసు కదా. ఏది వాడాలి R కింద? If you are capitalizing earnings of EPS, you have to consider return on equity. Guys, clear? Now, what about the R? 9% minus 2%. 2.295 divided by 0.07. So, what is your capacity to purchase that share? Up to 32.79. What about the real value? Undervalued or overvalued? That's it. 7 marks. Guys, clear? Dealing case 1 is very easy. The entire stuff involved in case 2. It's a CA final security valuation problem. And also is there in your CMA final also in SFM. Are you clear, sir? బట్ ఎగ్జామ్లో అది సిఏలో ఉందా సిఎంఏలో ఉందా గుర్తురావు. నీకు మార్క్స్ కావాలంటే నీ బుర్రే వాడాలి. క్లియర్ సార్? డన్? దెన్ ఓకే, టేక్ ఏ బ్రేక్. ఆఫ్టర్ బ్రేక్ వీ విల్ కంటిన్యూ. సో అప్ టు 4:40. ఓకే గైస్, థ్యాంక్ యూ.
Come to illustration number 12. If you learn this problem, you can easily answer all discounted cash flow methods in chapter 6. You can expect one question also. Guys, okay? So I said already, when it comes to the difference between this dividend model and cash model is only dividend model I considering DPS. In cash model, instead of DPS, I consider cash flows of a company. Are you clear? Now read the question properly. P Limited currently pays a dividend. What's the word they given? Currently. It means it is a D0. But for the calculation purpose, I need to use D1 or expected one. Are you clear, guys? There is 2 rupees. Value your forecast growth of 15%. What's the mean for forecast? Noun period. Noun period. Forecast means yes, future. The future is either 5 years or 10 years or 20 years. That's the word they're using, forecast. Can you use a word called short-term growth rate? For a forecasted period, they're using 15% growth rate. For the next 3 years, that's what I said. For the n number of years, 3 years. Next, followed by 4% growth in perpetuity. What about this 4%? Long-term growth. For understanding purpose only, I recorded capital G and small g, sir. There is no capital G and small g. It's just small g. But you have to decide it is a short-term growth rate as well as long-term growth rate. Long-term growth rate I am using for the purpose of calculating value per share of future. That is nothing but perpetual life. That 15% I am using for the purpose of 3 years calculation. The required return is calculate the current value per share. In above all calculation, I am not using the concept of present value factor. Why? Because all calculation done at particular period only. That is nothing but 0 period is assumption. That's why I used a name called V0. The 0 represent current year. Are you clear, guys? Previous problem ekkada man present value factor valla. Enduku mottham oke year lone chestunam. Perpetuity calculation kuda ee period 0 period information em ledu kabatti 0 period lo chesam, present value factor tho multiply cheyala. But here they specifying 3 years. D1 at the end of the first year, D2 at the end of the second year, D3 at the end of the third year. But I want present value of V0. I need to bring the D1, D2, D3 into 0 period. Guys, clear? When it comes to perpetual calculation, where we are doing? At the end of the third year to infinity years. The calculation will be different. So first you have to figure out the value, then you have to multiply with the present value factor. So what is the value calculation with growth model? D expected dividend divided by R minus G. You will get a value. You need to send that future value to present with help of multiplying the present value factor. Very, very important. In future calculation point of view, perpetual point of view, first you have to figure out value. Then you need to send into present value. But when it comes to D1, D2, D3, calculation already completed. Just you have to transfer to present value. Hope you guys clear? Now see, year 1, year 2, year 3. I want expected dividend for year 1. How we get expected dividend for year 1? 2 rupees into first year growth. Can I take 2 into 1.15? Now what is our D1? 2.3. What about the second year dividend? 2.3 is a current year for second year, current value for second year. I want future value. Add again second year growth. 2.645. I want third year. 3.041. They are present values or future values? They are present values or future values? First year ending, second year ending, third year ending. That's why I need to bring with help of present value factor at the rate of 13%. I hope you know how to calculate present value factor. 1 divided by 1.13. 0.88. Consider 3 values with a round off with the fourth element. 0.7. I think here 0.88. 4. Okay, 5 round up with a. What about the second year? 783. What about the third year? 0.693. Yeah? Okay. I will get a present value of expected dividend. 2.3, 2.03. That's only now. 2.3 into 0.885. 33. Next, 2.645 into 0.783. 2.071. What about the third year? 2.107. The calculation is not completed. It completed only forecasted valuation. Now we have to calculate a perpetual valuation. You can observe. I am writing year 3 only. Why year 3? I can't find out the infinity year. That's why I am using a common sense. Which year I am doing this? At a year, 4th year beginning, 3rd year ending. It means 3 years future. Guys, clear? You can write like this. 4th year to infinity. 4th year to infinity. First do the calculation. Expected dividend. How you get expected dividend? Current dividend into growth. Which one is the current for 3rd year, 4th year? 3rd year only, no? Now 3.041 is the current year for 4th year. I need to send into future with growth. 1 plus what growth? 2 growth rates is there, 15% and 4%. 0.04 divided by R minus G. What about the R? 0.13 minus growth 0.04. If you do this, you will get a value. Hope you guys clear? Now tell me the value. $35.15 into present value factor, you will get the present value. Which present value factor I have to consider? 3rd year. 0.693. Now tell me the present value of perpetual value. 24 point. So now the value of share equals to sum of forecasted present value of dividend plus present value of perpetual dividend. Now add all. 2.033 plus 2.071 plus 2.107 into 24.36. 30.56. 30.56 is the value per share. So the differences came because of decimals. Hope you guys clear or done? Now when it come to illustration number 13 completed, 14 completed, 15 completed. Yeah, come to illustration number 16. Put a 5 star for this also. Before illustration number 16, we have to understand the concepts. We need to learn the concepts called capital budgeting techniques. In FM, we are taking 3 decisions. Based on that only, we are segregating the chapters. Financing decision, investment decision, dividend decision. Hope you guys clear? When we are taking which decision you are taking first? Finance or investment? Finance. Why? Because double untene kada business cheyadaniki. That's the first taking decision is called investment financial decision. By using that money, we are investing on fixed assets and current asset. That is called investment decision. With the help of the investment, I am generating the profit. With the help of finance, I need to pay cost. After settlement of these two, I will get a profit. That can I share it to my owners. That is called dividend decision. Are you guys clear? Why I am giving this clarity means finance decision point of view, income statement is different. And the investment decision point of view, income statement is different. And dividend decision point of view, there is no income statement. Finance point of view is different. And the investment point of view is different. So what is the difference means? At the time of finance, I don't have any assets for a new company.
That's why I'm not considering the concept name called depreciation. Guys, clear? Sales minus variable cost, you will get a contribution minus operating expenses, you will get EBIT directly. EBIT minus interest, you will get EBT, minus tax, you will get EAT, minus preference dividend, you will get EISH. This is the income statement as per finance decision. When it comes to investment decision, now I have assets. Now I have a assets. Now the point here, sales minus variable cost, you will get a contribution as usual, minus operating cost, operating fixed cost, exclude depreciation. Exclude depreciation, you will get EBDT, earning before depreciation and tax. Here, financing point of view EBIT, investment point of view EBDT. At the time of finance, we are ignoring interest. At the time of investment, we are ignoring, at the time of finance, we are ignoring depreciation. At the time of investment, we are ignoring interest. Hope you guys clear? But you are a existing company. You will get EBITDA. Earning before interest, tax, depreciation and amortization expenses. That kind of clarity you have to maintain. New company, we can call it, we are removing the interest portion, but when it comes to the existing company, you have to consider interest, depreciation and amortization expenses. Guys, clear? Now I am saying that income statement regarding to investment decision. We are at EBDT, right? PBDT or EBDT, earning before depreciation and tax. Less depreciation for the purpose of tax advantage. If you remove depreciation, your taxable profit will be reduced. That is nothing but EBT you will get. Minus tax, you will get PAT. Are you clear? Here I am not removing a preference dividend. Here I am adding the depreciation again. I want cash in investment decision. Guys, clear? PAT plus depreciation, you will get CFAT, cash flows after tax. Based on that only, that entire capital budgeting is revolving. CFAT, cash flows after tax. Are you guys clear? Now the point, sir, why you are reducing, why you are adding, sir, depreciation? Just వదిలేసి అయిపోద్దిగా. లెస్ చేస్తున్నావు, యాడ్ చేస్తున్నావు, సెట్ ఆఫ్ ఎఫెక్ట్ జీరోనే కదా. ఎస్ ఆర్ నో? బట్ if you're not considering the depreciation, your taxable profit will be increased. That's the purpose. I'm first reducing, I will get a less taxable profit. I paid a less tax again for the purpose of cash concept. Up to now, I calculated accrual concept. Are you clear? Now the non-cash element is there, depreciation. I am adding back, readjusting. Less readjusting, add. I will get a CFAT. Guys, clear? That's it. You can observe this is the details of the income statement as per financing decision. There is a detailed statement as per investment decision. Okay, next we have to discuss about the techniques of capital budgeting. We have non-discounting techniques and discounting techniques. If you consider time value of money concept, that is called discounting technique. If you are not considering time value of money, it means ఇప్పుడు మనకి D1, D2, D3 ఫ్యూచర్ వాల్యూస్ ఉన్నాయి కదా, D1, D2, D3, వాటిని యూస్ చేసుకొని నువ్వు డెసిషన్ తీసుకుంటే దాన్ని నాన్ డిస్కౌంటింగ్ టెక్నిక్స్ అంటాం. అలా కాకుండా నువ్వు ప్రజెంట్ వాల్యూ ఫ్యాక్టర్తో మల్టిప్లై చేస్తే 2.03 అవచ్చాయి కదా, వాటిని యూస్ చేసుకొని కానీ నువ్వు డెసిషన్ తీసుకుంటే వాటిని డిస్కౌంటింగ్ టెక్నిక్స్ అంటాం. దట్స్ ద డిఫరెన్స్. Are you clear? Under non-discounting techniques, we have accounting rate of return, ARR, payback period, payback reciprocal, payback profitability. In our business valuation, they are not touched any technique except two. One is NPV, another one is IRR. NPV and IRR. For understanding purpose only, I am giving this clarity. Non-discounting techniques completed. Now when it comes to the discounting techniques, the first one is discounted payback period, net present value, technically known as NPV, internal rate of return, technically known as IRR, profitability index, modified NPV, modified IRR, adjusted NPV. These are the concepts we have under discounting techniques. Okay, out of this they provided a problem only relating to NPV and IRR. That's why I am skipping the remaining concept. I will explain only NPV and IRR. IRR also here is not required. For chapter 7 valuation of assets and liabilities we required, called yield to maturity calculation. Are you guys clear? Now NPV, net present value. The calculation of net present value is present value of cash inflow minus present value of cash outflow. Present value of cash inflow minus present value of cash outflow. Here you have two types of cash inflows. One is operating cash inflow. Another one is terminal cash inflow. The word operating cash inflow means we are doing daily sales. Out of sales, we have to less the cost, and if you have any adjustment regarding to non-cash, readjust, then you will get a cash. That is called operating cash inflow. At the end of the business, I will sold my all assets for scrap. That also one of the income I'm generating. Yes or no, sir? In business, I have two types of cash. One is day-to-day activity cash. Another one is terminal cash. Guys, clear? But outflow is only one. What is outflow? Investment. But this kind of basic is not sufficient. There is in details. This statement is there, sales minus variable cost, operating, etc., up to CFAT. This is called every year operating cash inflow calculation. ప్రతి ఇయర్ నువ్వు ఇవన్నీ క్యాలిక్యులేట్ చేసుకుంటూ పోవాలి. ఈ ఇయర్ సేల్ ఎంత అయింది, దానికి వేరియబుల్ కాస్ట్ ఎంత, ఆపరేటింగ్ ఫిక్స్డ్ ఎక్స్పెన్సెస్ ఎంత, ట్యాక్స్ ఎంత పే చేయాలి, డిప్రిషియేషన్ ఎంత ఉంది, అడ్వాంటేజ్ ఎంత తీసుకుంటాం, మళ్ళీ డిప్రిషియేషన్ యాడ్ బ్యాక్ చేస్తే నీ క్యాష్ వచ్చేస్తుంది. ఇయర్ 1, ఇయర్ 2, ఇయర్ 3, 4 క్యాష్ ఇయర్స్ ఎన్ని చెప్తే అన్ని ఇయర్స్కి నువ్వు క్యాలిక్యులేట్ చేసుకోవాలి. క్లియరా? Another cash inflow is there. What is another cash inflow? Terminal cash inflow. As of our knowledge, scrap. Not only scrap, there is some adjustments. The primary thing is scrap. Second one, my book value of asset sold is there, scrap asset. The book value of asset is 10 lakhs. I sold for 12 lakhs. Now how much I realized as a cash? 12 lakhs. Out of the 12 lakhs, 2 lakh is a capital gain. I have to pay tax to Bhaskar sir. Yes or no? Which tax it is? Capital gain tax. Are you guys clear? Now payment of tax is a inflow or outflow? Outflow. Out of scrap receive 2 lakhs is there, you need to reduce the tax. Okay? Case 1. Case 2. My book value is 10 lakhs. I sold for 8 lakhs. Profit వచ్చినప్పుడు సారా ట్యాక్స్ తీసుకున్నారుగా, ఇప్పుడు మనం అడ్వాంటేజ్ తీసుకోవాలి. Capital gain and loss of sale of asset. Capital gain. Now it is a benefit to us. That's why I'm adding to 8 lakhs. Now you will get a net scrap value. Okay. Next, another very, very important point, working capital. Working capital. Working capital has two adjustments. Initially, we show what? Outflow. What is the purpose of working capital? We're investing for the smooth running of the business only. That's why initially we're showing as a outflow. We can't recover that working capital during the business. We can recover only after end of the business. Take an example to understand. With help of 2 crores, I constructed a petrol bunk in SR Nagar. For the 2 crores is sufficient, completed for with only fixed assets. Now I want a current asset called raw material. That is nothing but petrol. For that petrol, I invested 20 lakhs. As a working capital. If there is no stock, there is no sales. If you want to do smooth business, I need to put that 20 lakhs. Very clear? If I sold petrol, I will recover the 20 lakhs again. Yes or no? Again, I 20 lakhs, I will invest for purchasing of the petrol. Again, I sold the petrol, I will recover. Again, I will purchase, again I sold. I can't pull back. If I pull back the 20 lakhs, I can't run my business smoothly. ఆ 20 lakhs ఎప్పుడు నాకు రిలీజ్ అవుద్ది? ఆపేయాలి నేను పెట్రోల్ బంక్ని. ఎప్పుడు ఆపుతా? ఎండ్ ఆఫ్ ది బిజినెస్. గైస్ క్లియర్? That's why you have to show working capital initially as an outflow. At the end of the year, you have to show it is a inflow. Hope you guys understand about the working capital. That is called calculation of terminal cash inflow. Let us say, is there yeah, working note 3. Working note 3, present value of terminal cash flow, salvage value, less tax on profit, add a tax on loss. Are you agree for the two terms? Rendu rav edana okate vastadi. Okay. This is very, very important point when they give WDV, depreciation calculation. WDV method. Why? Because assets value never 0. But when you come to the straight line, for life it will be 0. Hope you guys clear? Done. Next, add working capital. You will get a future value of end of the life. For example, 10th year is the end of the life. This all values are received at which year? 10th year. But I am taking a decision at a 0 period. I need to bring the 10 years value to present with help of present value factor. Clear? Now working note number 1, cash outflow calculation. Investment only is not a outflow. I said already working capital, investment plus working capital, as well as if government provide any subsidies, you have to reduce. You have to reduce. If any installation relating to the machinery, which expenditure it is? Revenue or capital? Installation charges for machinery. Capital expenditure, you have to add to asset value. Now, cost of the project or asset, add installation charges, less subsidies given in the government or grants. Next, add working capital. Why adding working capital? Initially, it is a investment. This is a very, very important point. Not there in our BV, but in a FM is there. Sale proceeds. If you are taking a replacement decision, ఒక మిషన్ని రీప్లేస్ చేయాలా లేదా అని డెసిషన్ తీసుకునేటప్పుడు యూ హ్యావ్ టు కన్సిడర్ దిస్ పాయింట్ కాల్డ్ సేల్ ప్రొసీడ్స్. ఒక మిషన్ని కొత్తది కొంటున్నాము అంటే పాత మిషన్ అమ్మి ఆ డబ్బులు దీనికి వాడుతున్నామని మీనింగ్. గైస్ క్లియరా? సో దట్స్ అబౌట్ ప్రజెంట్ వాల్యూ ఆఫ్ క్యాష్ అవుట్లో. సార్ వై యు ఆర్ నాట్ మల్టిప్లైడ్ ప్రజెంట్ వాల్యూ ఫ్యాక్టర్? You can observe, I not multiplied present value factor, but I said it is a present value of cash outflow. This all happening at today only or 0 period only. That's why it always shows present values. Hope you understand. Then you can easily answer illustration number 15. 16. Easy Shine is a startup company that uses brushless machine to wash cars. Suppose Easy Shine make a initial investment in equipment of rupees. Cost of the machinery only, na? Outflow. The equipment depreciation on straight line basis. Okay. Over a 4 years to 0 book value. Can I tell the life of the project is 4 years? After 4th year ending, you have to close all those things. Next. At the end of the 4 years, the equipment will have a salvage value of rupees 15,000. 15,000. The marginal tax rate is 30%. The company is financed with a 50% debt, 50% equity. It means weight of equity 0.5, weight of debt 0.5. The debt carries an interest rate of 6% and the cost of equity is 19.8%. Sir, this is the information related to KO. Are you agree? KO is required here. Then how you convert the present value, sir? KO అవసరం లేదు. ప్రజెంట్ వాల్యూ ఎలా వస్తుంది? ఏ రేట్తో వస్తుంది? కేఈతో వస్తుందా? ఎలా వస్తాయి ప్రజెంట్ వాల్యూ ఫ్యాక్టర్ వాల్యూస్? 1 divided by 1 plus R only, na? What is the mean for R? Required return. What is the required return? Cost of capital. You don't have a cost of capital. You can't convert that future value to present. In maximum of the problems, they will give. Few problems, they will check like this. Instead of KO, if you consider KE, Sarvanashno, 7 marks. At least ఈ ప్రాబ్లం చేయడానికి 15 to 16 minutes పట్టుద్ది. పోనీ క్వశ్చన్ పేపర్ మొత్తం మీద ఎన్పీవీ కదా మనకు వచ్చి అనుకొని చేసామనుకో, అది కూడా పోద్ది కాన్సెప్చువల్గా నువ్వు క్లారిటీ లేకపోతే. గైస్ క్లియర్? దట్స్ ద ఇంపార్టెన్స్ ఐ ఎమ్ ఎక్స్ప్లెయినింగ్ ఎస్టర్డే కాస్ట్ ఆఫ్ క్యాపిటల్ చాప్టర్ డీటెయిలింగ్లీ. ఆర్ యు క్లియర్? డన్. The sales expenses and cash flows as per market sentiment. As per market sentiment, they already provided. They already calculated. You just cross check the given information is correct or not. That is sufficient. Total after tax cash flows. Cash flows also given. Okay. Now, understand the adjustment. This is a problem. Final standard. Same problem is there in your SFM. Okay. Easy Shine expects that it will have a year-on-year sales growth 50%. Before market sentiment, there is not talk about the growth concept. Assume that the cost of growth rate remains same as per market production. Case 1, you have to calculate weighted average cost of capital. Case 2, based on 50% of probability of both the market sentiments and the easy shine expectation combined, calculate the NPV. Generally, how I calculate NPV? Present value of cash inflow minus present value of cash outflow. Are you clear? Here they provided two scenarios. One is as per market sentiment, another one is as per easy shine expectation. Now first you have to figure out NPV as per market sentiment. Next you have to calculate NPV as per easy shine expectation. But formula is not changed. Present value of cash inflow minus present value of cash outflow. Now as per this your answer is 10,000. As per this your answer is 12,000. Are you clear? Now for the decision purpose you have to consider 50% of this, 50% of this. Now what is the answer? 5,000 plus 6,000, 11,000. That is the meaning of case 2. Guys clear? స్టూడెంట్స్ ఏం చేస్తారంటే ఇక్కడే 50% అప్లై చేస్తున్నారు. ఎన్పివి ఫైండ్ అవుట్ చేసిన తర్వాత వచ్చిన ఆన్సర్లో 50% కన్సిడర్ చేయమంటున్నారు. క్లియరా? దెన్ ఓకే. Here nothing is there. Into present value factor, into present value factor, into present value factor. You can observe. Fourth year, due to operating 3,52,580, salvage value 15,000, tax on salvage value 4,500, the net salvage value 10,500 only. Sir, why they calculated tax? Why they calculated tax? Sir, as per straight line method, last year asset value 0, sir. But how you sold for 15,000, sir? That entire 15,000 is a what? Capital gain only, na? Yes or no, sir? That's why they paid tax on 15,000. So this is called terminal cash inflow. From operation plus terminal 10,500, sum is known as 3,63,080. The calculation correct only. Now if you multiply again present value factor, you will get a present value of cash inflows. Minus present value of cash outflow, you will get a case 1 answer. Now you have to figure out case 2. Guys clear? What's the case 1 they're asking from us? K1, na? Weights is there, K is there, KD is there. KD is there. KD. Annaga question chudara. Interest rate not there. How much is the interest rate? That is a pre-tax. That is a pre-tax. You have to convert as a post-tax. ఇది 5th టైమో 6th టైమో చెప్పడం. ఎందుకంటే అవుట్ ఆఫ్ ఫ్లోలో వెళ్ళిపోతున్నారు అందరూ కేడీ అనుకోని. Are you clear? Now weights already there 0.5, 0.5. KE directly given 19.8%. Now 0.98 into 0.5 plus what about the post-tax KD? 6% into 70% into weight 0.5. Now you will get an answer 12%. This is a weighted average cost of capital we are using for present value factor calculation. Next, case 2. Estimation of NPV for Easy Shine Limited. So is the direct answer. I calculated working notes. Combined value 50% on NPV of market production plus 50% NPV of market sentiment. Direct answer. Are you okay? Now I need to figure out NPVs as a working notes. Working note number 1. Calculation of NPV under market sentiment. Cash flow is there directly as per market sentiments. First year 1,99,000, 2,45,200. Third year 2,81,600. Fourth year 3,52,580, 10,500. Why 4 years? This is called operating. This is called terminal. Both are 4th year only, na? End of the year. Next, if you multiply with the present value factor of 12%, you will get a present values. Sum of present value is nothing but 8,04,328. 329. Now what is the outflow? 6 lakhs machinery cost. There is no more adjustments. If you remove 6 lakhs, you will get a NPV of 2,04,329. Out of this organization value purpose, I need to consider 50%. ఇక్కడ వరకు అందరూ చేస్తారు సార్. The next very very important point, working note 2, computation of NPV based on market changes. Based on market changes. What are the change they said, sir? 50% incremental in the cash. 50% increments. 50% increments. Now, when it come to, you already have a year one sales. It is not a current sale. You already have a year one sale as per market expectation. Are you clear? After that year, 50% will be increasing. ఒకవేళ నీ దగ్గర ఇయర్ వన్ సేల్ లేదనుకో, అప్పుడు ఏం చేయాలి? కరెంట్ ఇయర్ నుంచి గ్రోత్ని యాడ్ చేసి ఇయర్ వన్కి తీసుకురావాలి. బట్ యూ ఆల్రెడీ హ్యావ్ ఎ ఇయర్ వన్. వాట్ ఇస్ ద మీన్ ఫర్ ఇయర్ వన్? ఎండ్ ఆఫ్ ద ఇయర్ ఆర్ బిగినింగ్ ఆఫ్ ద ఇయర్? End of the year. That's why I'm using present value factors. Common sense that is. End of the year only. Year 1 అని చెప్పాడంటే end of the year అని. అప్పుడు end of the year అంటే already the growth will be included only కదా. That's why I am not considering growth concept for this year 1. Very very important point. Why? Because in all problems we are adding the growth. For this problem we are not adding. The logic behind the not adding is it already year 1 ending value. Clear? Now year 2 50% increment. Now 4 lakh into 1.5%, 1.5 times. Now 6 lakhs. Again 1.5 times 9 lakhs. Again 1.5 times 13 lakh 50,000. 13 lakh 50,000. Now cost of goods sold. Variable cost only, na? Now tell me about the variable cost calculation. నీకేం అర్థమైంది అక్కడ? Do you know common size statements? Common size statement analysis in ratio analysis. You have to consider a base of sales. They will give income statement. Everything you have to divide it with sales. You will get a percentage. It means sale always shows 100%. Out of that remaining all will be included. Guys, clear? Sale ఏదైతే ఉందో 4 lakhs రిమైనింగ్ అన్ని దాంట్లో ఇంక్లూడ్ అయ్యి ఉంటాయి. కాబట్టి దాని నుంచి మనం పే చేసుకుంటూ వస్తాం. కాబట్టి లెస్ చేస్తా వెళ్తాం. పాయింట్ టు బి నోటెడ్. 4 లక్షలు సేల్స్ జనరేట్ చేసినామంటే దాంట్లో నుంచి వేరియబుల్ కాస్ట్ లెస్ చేస్తా ఫస్ట్. అంటే మీనింగ్ ఏంది? దాంట్లో ఉందనా లేదనా? దాంట్లో ఇంక్లూడ్ అయ్యిందనే కదా మీనింగ్. హోప్ యు గైస్ క్లియర్? దట్స్ ద వే యూ హ్యావ్ టు ఫిగర్ అవుట్ ది వేరియబుల్ కాస్ట్. హౌ మచ్ పర్సెంటేజ్ వేరియబుల్ కాస్ట్ ఇస్ దేర్? 25%. ఆర్ యు క్లియర్? ఇన్ present market, how much percentage? 25%. Now you can directly apply on present sales. What are the present sales? 4 lakhs. Confusing on the point? Clear? Now what about the second year cost of goods sold percentage? 1.3 lakh divided by 5,20,000. 25%. Already I have a grown sales na. If I multiply, I will get a grown cost of goods sold. That's the way they calculated cost of goods sold. There is no confusion, guys. First they figure out a percentage of cost of goods sold on sales. Then they are directly multiplied on grown sales. So growth sales మీద అప్లై చేస్తున్నా కాబట్టి నీకు వచ్చే కాస్ట్ ఆఫ్ గుడ్స్ కూడా గ్రోతే వచ్చేస్తుంది. కాబట్టి నువ్వు స్పెషల్గా మళ్ళీ 50% యాడ్ చేయాల్సిన అవసరం లేదు. క్లియర్? నెక్స్ట్ మార్కెట్ ఎక్స్పెన్సెస్ ఇస్ దేర్. ఇట్ ఆల్సో బి సేమ్ లాజిక్. మార్కెట్ ఎక్స్పెన్సెస్ డివైడ్ బై సేల్స్. So the point is here you have to consider all grown values. Clear? నాకు ఇండివిజువల్ వాల్యూస్ కానీ తెలిస్తే దానికి 50% యాడ్ చేసుకుంటూ వెళ్ళిపోతా. బట్ ఇన్స్టెడ్ ఆఫ్ దట్ వాట్ ఐఎమ్ డూయింగ్, ఐ నో ద పర్సంటేజ్. Now if I know the current percentage, I can directly apply on grown values. I will get a grown expenses. Clear? 20%, 20%, 20%, 20%. If you apply directly on grown sales, you will get a grown manufacturing expenses. Now you will get an answer name called EBDT. Out of EBDT, you have to reduce what? Depreciation. But in question, they specified EBIT. In question, they specified EBIT. Hope you guys clear? I said at time, interest is ignorable. You can go and check the entire question. There is a no capital value of debt. There is a no capital value of a debt. Now, how I figure out the interest value? Clear? నీకు చాప్టర్ 6 డిస్కౌంటెడ్ క్యాష్ ఫ్లో మెథడ్ స్టార్ట్ చేసినప్పుడు క్లారిటీ వస్తుంది ఎందుకు ఇంట్రెస్ట్ని ఇగ్నోర్ చేస్తామని. అప్పుడు దాకా జస్ట్ టేక్ అన్ అజంప్షన్ ఇన్ ఇన్వెస్ట్మెంట్ డెసిషన్ వీఆర్ నాట్ కన్సిడరింగ్ ఇంట్రెస్ట్. As per my knowledge, after reducing of operating fixed cost, I will get what? EBDT. That's I recorded. Clear? Now less depreciation. Straight line means all years same. How? Current cost of the asset minus scrap divided by life. What is the asset value? 6 lakhs divided by 4. Scrap is there, na? Scrap how much? 15,000. 6 lakhs minus 15,000 divided by? Answer? 1 lakh? But you can observe how much I taken. Why? So that 15,000 is not a scrap, it is a gain value. That 15,000 is not a scrap. Why? Because book value is 0. ఎలా అమ్ముదో? క్లియర్ సార్? ఇట్లాంటి చిన్న చిన్న పాయింట్స్ టచ్ చేస్తారు సార్. మనం ఫ్లోలో ఏం చేస్తాం, మనకి స్క్రాప్ అనేది మాత్రమే గుర్తొస్తుంది ఆ టైంలో. కాబట్టి డైరెక్ట్గా లెస్ చేసి డివైడెడ్ బై చేసేస్తాం. క్లియర్? నౌ యూ విల్ గెట్ ఈబీటీ లెస్ ట్యాక్స్ రేట్ ఈస్ గివెనా 30%. అలాంటి పాయింట్స్ దగ్గర హైలైట్ చేసుకొని చూసుకుంటే ఇప్పుడు నెక్స్ట్ ఆ టైం ఆ ప్రాబ్లం నువ్వు రిఫర్ చేసేటప్పుడు ఏం చూడాల్సిన అవసరంలా. నువ్వు ఎక్కడైతే స్టార్ పెట్టావో ఆ పాయింట్ చూసుకుంటే ప్రిపరేషన్ అయిపోయినట్టు. యా నో డైరెక్ట్లీ అసెట్ 6 lakhs రిటర్న్ డౌన్ పర్సంటేజ్ 20%. 6 lakhs into 20%, 1,20,000 depreciation for current year. Next, 6 lakhs minus 1,20,000 pending value into 20%. Sir, as per straight line method formula, cost minus scrap divided by life. As per WDV formula, there is a no cost minus scrap. Direct asset into percentage is given. Okay? As per WDV, there is a no scrap consideration for WDV. They will specify the percentage. 6 lakhs into 20%, you will get a depreciation of first year. Reduce the depreciation, you will get next year WDV. Again, multiply with the 20%. Are you clear? Now, EAT is there. EAT, cash profit or accounting profit? EAT, cash profit or accounting profit? EAT is nothing but PAT, is nothing but net profit. Net profit is an accounting profit. Accounts follow a rule called accrual concept. In investment decision, I don't want accrual profit, I want cash profit. That's why I'm adjusting other than cash elements and other operating expenses. ఈ ప్రాబ్లం అయితే ఇవ్వలేదు, కొన్ని ప్రాబ్లమ్స్లో అదర్ ఆపరేటింగ్ ఎక్స్పెన్సెస్ ఉంటాయి. లాస్ ఆన్ సేల్ ఆఫ్ అసెట్ ఇఫ్ ఆల్రెడీ ఇంక్లూడెడ్ యూ హ్యావ్ టు రీఅడ్జస్ట్. క్లియర్ గైస్? నౌ add depreciation, you will get a CFAT as per expectation of the easy shine. So this is your CFAT: 1,99,000, 2,76,000, 3,60,000, 5,17,500. Guys, clear? Now it is a continuation of the above problem only. Scrap will be similar. మనకి ఏమైనా చెప్పుంటే ఎక్స్పెక్టేషన్లో స్క్రాప్ లేదని మనం ఇగ్నోర్ చేసేవాళ్ళం. వాళ్ళు ఏం చెప్పలేదు కాబట్టి ఇన్ఫర్మేషన్ ఉంది కాబట్టి తీసేసుకుంటాం. అగైన్ 10,500. నౌ ప్రజెంట్ వాల్యూ ఫ్యాక్టర్ అట్ ద రేట్ ఆఫ్ 12%, యూ విల్ గెట్ ప్రజెంట్ వాల్యూస్. సమ్ ఆఫ్ ప్రజెంట్ వాల్యూ ఈజ్ నౌన్ యాజ్ ప్రజెంట్ వాల్యూ ఆఫ్ క్యాష్ ఇన్ఫ్లో మైనస్ అవుట్ఫ్లో 6 lakhs, యూ విల్ గెట్ NPV యాజ్ పర్ ఈజీ షైన్ ఎక్స్పెక్టేషన్. నౌ అవుట్ ఆఫ్ దిస్ యూ హ్యావ్ టు కన్సిడర్ 50% ఫర్ కంబైన్డ్ వాల్యూ ఆఫ్ ది ఫర్మ్. నౌ సీ ద మెయిన్ ఆన్సర్. 2,04,325 into 50%, 3,89,423 into 50%. The value of the business is 2,96,876. NPV is not a value here. Probability of NPV summation is known as value. Hope you guys clear? So what are the new things we learned? At the depreciation, we are not reducing the scrap. Are you clear? Remaining all we know. As well as the common sense is there. If you apply percentage on grown values, you will get a expenses also with growth. Clear? Done? That's it about chapter number 5. Trust me, you will get one question out of these new questions added. Because 6 or 7 add చేసే new questions from the workbook models. దాంట్లో ఇది ఒకటి. గైస్ ఓకే, మీరు ఏదైతే 5 స్టార్ అని పెట్టారో అవే కొత్తగా యాడ్ అయినట్టువి. బేసిక్ వర్షన్స్ అన్ని వదిలేసా, ఎక్స్ప్లెయిన్ చేసా, బట్ స్టార్స్ ఏం పెట్టేలా. రీజన్ ఏంటి, అవి నువ్వు ఈజీగా ట్యాకిల్ చేయగలుగుతావు. ద నెక్స్ట్ చాప్టర్ నెంబర్ 6 guys. Sir, if you plan perfectly EVO, why? Because you all, I hope you already learned, you are attended regular classes. You can easily answer 80 marks of the question paper. But the thing is, you have to maintain the time. Are you clear? వచ్చు కదా అనేసి 2A నుంచి స్టార్ట్ చేయాలని రూల్ ఎక్కడా లేదు. ఫస్ట్ గో విత్ ద ర్యాంకింగ్ కాన్సెప్ట్. పర్ఫెక్ట్గా ఏది రాయగలుగుతా, దాంట్లో తక్కువ టైంకి ఏది రాయగలుగుతా. గైస్ క్లియర్? 2A 2B ఇలానే ఆర్డర్లో ఉండాలని ఎక్కడ రూల్ లేదు. నీకు 3A వచ్చి పర్ఫెక్ట్గా 3A, నీకు 5A వచ్చి పర్ఫెక్ట్గా విత్ షార్ట్ టర్మ్, గో విత్ దట్. అలా ఫస్ట్ విత్ ఇన్ 1 or 1.5 hours సేఫ్ జోన్లోకి వెళ్ళిపోవాలి. ఇట్ మీన్స్ 40 to 50 మార్క్స్ రాసేయాలి నువ్వు. నెక్స్ట్ మనం 1.5 hour మొత్తం నీ రిస్కీ టైం, దాని మీదే ఆధారపడి ఉంటుంది నీ ఎగ్జామ్షన్. మనం ఏం చేస్తామంటే రివర్స్ చేస్తాం. రిస్కీ ప్రాబ్లమ్స్ అంతా ఫస్ట్ చేస్తాం, ఈజీ ప్రాబ్లమ్స్ అంతా లాస్ట్లో పెట్టుకుంటాం. ఇక్కడ ఏమైపోయిందంటే యూ కెన్ అబ్జర్వ్ సైకాలజీ. నువ్వు హార్డ్ ప్రాబ్లమ్స్ టచ్ చేయడం వల్ల నీ బ్రెయిన్ అనేది చాలా ఎక్కువ వర్క్ అవ్వడం స్టార్ట్ అయిపోద్ది. చిన్న చిన్న వాటికంతా ఎక్కువ ఆలోచించేస్తావు. ఆ ప్రాసెస్లో నువ్వు లాస్ట్కి వెళ్ళేసరికి ఏదైనా ఆలోచించే విషయం వచ్చినప్పుడు చాలా ఓవర్గా థింక్ చేస్తావు బేసిక్ ప్రాబ్లమ్స్ దగ్గర. స్టార్టింగ్ ఎలాగో రాసుండవు, లాస్ట్లో కూడా రాయవు. రిజల్ట్స్ నెగిటివ్ వస్తుందని చెప్పట్లా, నువ్వు అనుకున్న స్కోర్ తగ్గిపోద్ది. క్లియర్ సార్? You need to handle like that kind of psychological moments in exam. Just exam is a psychology, sir, my point of view. దాన్ని నువ్వు హ్యాండిల్ చేసే కెపాసిటీ నీకుంటే ఎలాగో నువ్వు ఎవడైనా ప్రిపేర్ అయ్యే ఎగ్జామ్కి వెళ్తాడు. ఆడు ప్రిపేర్ అవ్వలేదనుకో, ఆడికి సైకాలజీ వద్దు, ఏమొద్దు, ఆడు జస్ట్ టైం పాస్ చేసి వచ్చేస్తాడు. ప్రిపేర్ అవ్వకుండా అయితే ఎవడు ధైర్యం చేసి ఫైనల్ ఎగ్జామ్ రాయడు. బట్ ప్రిపేర్ అయ్యి ఎందుకు ఫెయిల్ అవుతాం అనే దానికి అనాలిసిస్ చేసుకోవాలి నువ్వు. అది క్లియర్? దీన్ని ఇంప్లిమెంట్ చేయి. నువ్వు ఏ సబ్జెక్ట్ అయినా నీకు వచ్చిందే పర్ఫెక్ట్గా రాసుకుంటూ వెళ్ళిపో. ఫస్ట్ ఆ కాన్ఫిడెన్స్ బిల్డ్ అయ్యి సైకలాజికల్గా పాజిటివ్నెస్ వస్తుంది. అప్పుడు నీ బుర్ర ఇంకొంచెం పని చేయడానికి ట్రై చేస్తుంది. So as per your material, next chapter only, chapter 6. Okay. From this chapter, you can expect 2 questions, sir. Average 1 question, max 2 questions. So when it comes to the beauty of Spmbv in last 3 attempts, we have only few only. In last 3 attempts, they are focusing on either one chapter for more weightage. In one attempt, they are asked 40 marks from chapter 2. In one attempt, they are asked 35 marks from measures and acquisition. In one attempt, they are asked 37 or 39 marks from valuation of assets and liabilities. Till date, they are not touched the concept name called methods and approaches. ఒకవేళ దాన్ని టచ్ చేసి 3 క్వశ్చన్లు ఇచ్చేసాడు అనుకో, పండగ మనకి. ఎంత డిఫికల్టీ క్వశ్చన్ చాలా ఈజీగా ఉంటుంది ఈ చాప్టర్లో మనకి. Are you clear? Now, when it comes to chapter 6, సార్ ఈజీగా ఉంటుంది ఇన్ ద సెన్స్ నీకు వస్తే సార్ ఓకే అన్ని క్వశ్చన్స్ ఈజీ అని చెప్పట్లా. కాన్సెప్చువల్లీ యూ హ్యావ్ ఏ గ్రేట్ నాలెడ్జ్, ఆల్ క్వశ్చన్స్ ఆర్ ఈజీ. Now when it come to chapter number 6, this intro we already done in last class in chapter 5. Approaches. We have 3 approaches: market approach, income approach, cost approach. Under market approach we have 3 methods: market price method, market company comparable multiples, market company comparable transaction methods. And there is 3 methods we have under market approach. When it come to the net income approach, we have 2 methods: discounted cash flow method, earning capitalization method. When it come to the cost approach, we have another again 2 methods: cost of reproduction, cost of replacement. Cost of reproduction, cost of replacement we will discuss in chapter 7. Only one problem is there regarding to that concept. No problems is there in entire ICMA sources relating to cost of reproduction or cost of replacement. Only one problem is there, that I inserted in chapter number 7. Okay. Apart from these methods, ఎన్ని చెప్పా మొత్తం 7 మెథడ్స్ చెప్పా. మార్కెట్ ప్రైస్ మెథడ్, కంపెనీ కంపారబుల్ మల్టిపుల్స్, కంపెనీ కంపారబుల్ ట్రాన్సాక్షన్స్, డిస్కౌంటెడ్ క్యాష్ ఫ్లో మెథడ్, అర్నింగ్ క్యాపిటలైజేషన్, నెక్స్ట్ రీప్లేస్మెంట్ కాస్ట్, రీప్రొడక్షన్ కాస్ట్. అపార్ట్ ఫ్రమ్ దిస్ వీ హ్యావ్ సమ్ మోర్ మెథడ్స్. These methods classified based on approaches. Apart from the approaches, we have some specified methods called net assets valuation, net assets valuation, economic value added, economic value added. Next, when it comes to the concept name called market value added. As per your board book, economic value added presented in methods and approaches as well as assets and liability. I sent all economic value added problems to assets and liabilities. We will discuss at the time of chapter 7. Removing the duplication. Are you clear now? Done. Now in this chapter, we are focusing about discounted cash flow method, earning capitalization method, market price method, company comparable multiples, company comparable transactions, net assets valuation. Here net assets also, both cases is there. Book value as well as fair value. I hope you know the calculation part of the net assets. Total assets minus external liabilities. Total assets minus external liability. Sometimes they will give market values in additional information. Land value is, book value is 1 crore. The real fair value is 1.7 crores. The fair value, if you consider 1.7 crore, that is called net value of fair value of net assets. Instead of 1.7 crores, if you consider 1 crore as a land value, that is called book value of net assets. We will discuss, no issue. Economic value added method, market value added method. 2 methods I missed here. Replacement, reproduction. There is no concepts here. Okay. And also, I am sending these 2 concepts to chapter 7. So here we will discuss only these 3 methods, these 6 methods. These 2 came from income approach, these 3 came from market approach. Are you clear? Now without late, I start with the concept number 1, discounted cash flow method. 7 marks pakka question, print esko. Discounted cash flow method. Now the discounted cash flow method means the only principle we are using, bringing future economic benefit into present value. Sum of all years value is known as value of the business. Simple. ఇంత ముందు చేసాం గుర్తుందా? NPV. For example, forgot about the case 2. We calculate NPV na. Sum of 4 years present values is known as value of the business. But if you observe, in NPV point of view, in previous problem of chapter 5, we are not calculated perpetual cash flow. We just calculated up to 4 years. Clear, guys? But my intention to purchase a business is I need to continue for future. నేను ఏ ఇంటెన్షన్తో ఒక బిజినెస్ని అక్వైర్ చేస్తా? నెక్స్ట్ 2 yearsలో క్లోజ్ చేద్దామన్నా, కంటిన్యూ చేద్దామన్నా? కంటిన్యూ చేద్దాము అన్నప్పుడు ఇట్ హ్యాస్ ఎ పర్పెచువల్ లైఫ్ నా. నౌ హౌ కెన్ ఐ ఫిక్స్ ఫర్ 4 years? 4 yearsని బేస్ చేసుకుని వాల్యూ చేయగలుగుతాను దాన్ని. ఏం చేయాలి? 4 years ప్లస్ ఐ నీడ్ టు కన్సిడర్ పర్పెచువల్ వాల్యూ. సమ్ ఆఫ్ దిస్ 2 ఈజ్ నోన్ యాజ్ వాల్యూ ఆఫ్ ది ఆర్గనైజేషన్. క్లియరా? ఆడొకటి చెప్తున్నారు, ఈడొకటి చెప్పట్లే, క్లారిటీ ఇస్తున్నా. అది క్లియర్. అక్కడ నాకు 4 years ఇన్ఫర్మేషనే ఉంది కాబట్టి అక్కడికే కంక్లూడ్ చేశారు. when it comes to discounted cash flow method, but the reality fact is valuation equals to discounted cash inflow of forecasted period plus discounted cash inflow of terminal period. Sum of these two is known as value of the organization as per which method? Discounted cash flow method. MCQ అడిగాడు సార్ అదే సెంటెన్స్. Clear? Done. Now, converting future economic benefit, that is nothing but what benefit? Cash flow into present value with help of required rate of return. Here, you have to focus on 2 points. One is risk, another one is return. The risk is nothing but KO. The cash flow is nothing but return. By consideration of the two, we are calculating the valuation. Clear? Now, we are following 5 steps, guys. Estimation of cash flow, estimation of forecasted cash inflow, estimation of terminal cash inflow, calculation of weighted average cost of capital, estimation of present value of forecasting cash inflow plus present value of terminal value. Guys, clear? If you follow these 5 steps, you can easily do the valuation as per discounted cash flow method. Okay? Now, in a problem's point of view, sometimes they will give this. Directly they will give this. Sometimes they will directly give this. ఒకవేళ ఇన్ఫర్మేషన్ ఇచ్చేసాడంటే గివెన్ అని రాసేసుకుని నెక్స్ట్ స్టెప్ చేసుకుంటూ వెళ్ళిపోవడమే. ఇఫ్ దే గివెన్ యూ నీడ్ నాట్ టు క్యాలిక్యులేట్, గో విత్ ద నెక్స్ట్ స్టెప్. క్లియరా? ఓకే. As per NPV and capital budgeting of your cmainter knowledge, what is the mean for terminal value? At the end of the business, if I sold any asset for a scrap, that is a terminal value as per my knowledge of capital budgeting in cmainter. But when it comes to the final level, the word terminal represent perpetual calculation. The terminology changes here. The word terminal represent perpetual. ఆల్రెడీ చెప్పా, ఏదైనా బిజినెస్ నేను కొనుక్కుంటున్నాను అంటే క్లోజ్ చేయడానికి కాదు, కంటిన్యూ చేయడానికి. అంటే నాకు టర్మినల్ అంటే లైఫ్ లాంగ్ ఎన్ని రోజులు వస్తుందో చెప్పలేను. దట్స్ ద మీనింగ్ ఆఫ్ టర్మినల్. హోప్ యు గైస్ క్లియర్? నెక్స్ట్ come to the step 1, guys. Estimation of cash flows first. Why? Because they are provided from sales, but you want cash flow. When it comes to the cmainter level, CFAD is sufficient. CFAD is sufficient. But when it comes to the final level, you have to learn new things called FCFF, FCFE. FCFF and FCFE. So here in a final level, all decisions are taken from FCFF and FCFE. Do you know the full form for FCFF and FCFE? FCFF, free cash flows of firm. Free cash flows of firm. FCFE represent free cash flows of equity firm. Free cash flows of firm and free cash flows of equity firm. Sir, both are same only, no, sir? Why two different names? Free cash flows of firm, free cash flows of equity firm. Totally it expresses company only, na? Then why two names are given? FCFF represent debt plus equity firm. Debt plus equity firm. FCFE represent only equity firm. Both cash same or different? Why? Because I need to settle cash to debenture holder, na? After settlement of debenture holder, if I have any cash balance, that can I share it to my equity shareholders. That's why FCFF different, FCFE is different. That's the final subject learnings. I hope you know the calculation of CFAT. Yes or no? Now you have to learn the calculation of FCFF and FCFE. సో దీన్ని చూసి భయపడద్దు. సింపుల్ కాన్సెప్ట్, కొన్ని డౌట్స్ వస్తాయి. కాన్సెప్ట్ మొత్తం అయిపోయిన తర్వాత నీకు క్లారిటీ వస్తుంది. అప్ టు నౌ జస్ట్ అబ్జర్వ్ వాట్ ఐఎమ్ డూయింగ్, వాట్ ఐఎమ్ సేయింగ్. క్లియర్ గైస్? Now see, As per cmainter, I calculated CFAT. Clear? Cash flows after tax. Now, I have a question. Out of CFAT calculation process, I reduced any capital expenditure? నేనేమన్నా క్యాపిటల్ ఎక్స్పెండిచర్ లెస్ చేశానా? ప్లాంట్ అండ్ మిషనరీ కొన్నదాన్ని నేను లెస్ చేశానా? I am not reduced plant and machinery purchase value, right? Now, if company need a capital expenditure, you have to spend after CFAT. Guys, clear? First, you have to figure out CFAT. Out of that, you have to settle capital expenditure minus capital expenditure. Minus capital expenditure. Now, after reducing capital expenditure, I have 10 lakhs now. I have 10 lakhs. ఆ 10 lakhs మీద ఎవరెవరికి రైట్ ఉంటుంది సార్? Who had a right on the 10 lakhs? Equity shareholder as well as debenture holder. That's why the 10 lakhs is known as FCFF. FCFF. Now, what is the amount of FCFF? 10 lakhs. Now, out of 10 lakhs, I need to settle to whom, sir, first? Equity shareholder or debenture holder? Debenture holder. I need to pay 10,000 as an interest. I am pay entire 10,000 or net of 10,000? Net of 10,000. What does it mean for net of here? 1 minus tax. That means first I need to reduce here interest 1 minus tax. Interest 1 minus tax. Now the company again procured money from debentures. Cash received? Yes or no? That settlement also done here itself. I need to pay revenue expenditure to debenture holder as well as capital expenditure. Point to be noted. Redeemable debentures is there. In redeemable debentures, first every year I will settle interest. At the end of the year, I need to settle capital. Are you clear? They are asking now. I need to settle a minus repayment value of debenture. Lesser add minus only. Next, at the same time, company again procured debentures. Now what happened? Cash inflow. Add issue of debentures. That is the adjustment you have to done for FCFF. If you done this adjustment, you will get an outcome name called what, sir? FCFE. What is the FCFE here? Cash availability in the hands of company for settlement of equity shareholder. Now, instead of this, they will give net borrowings, sir. ఇంత డీటెయిలింగ్గా చెప్పడం మీ క్వశ్చన్లో. ఇన్ క్వశ్చన్ దే డైరెక్ట్లీ గివ్ ఎ వర్డ్ కాల్డ్ నెట్ బారోయింగ్స్. ఆర్ యు క్లియర్? వాట్ ఇస్ హౌ టు క్యాల్కులేట్ నెట్ బారోయింగ్స్? ప్లస్ మైనస్ వాల్యూ ఆర్ మైనస్ వాల్యూ మైనస్ ప్లస్ వాల్యూ. అండర్స్టాండ్ ద లాజిక్? క్యాల్కులేషన్ ఆఫ్ నెట్ బారోయింగ్స్. మైనస్ వాల్యూ నుంచి ప్లస్ వాల్యూని తీసేస్తావా? ప్లస్ వాల్యూ నుంచి మైనస్ వాల్యూని తీసేస్తావా? ప్లస్ వాల్యూ నుంచి మైనస్ తీసేస్తావు. ఇట్ మీన్స్ ఇన్ఫ్లో మైనస్ అవుట్ఫ్లోనా? Debenture issue received value minus payment value. If it is a positive means inflow is more. If it is negative means, that's why if in maximum of the questions they will give net borrowings positive value. What is the meaning for net borrowings positive value? Cash inflow is higher than the cash payment. That's why you have to add. నీకు అక్కడ డౌట్ వస్తుంది ఎందుకు యాడ్ చేశారనేది. దిస్ ఈస్ ద లాజిక్ బిహైండ్ ది యాడింగ్ ఆఫ్ నెట్ బారోయింగ్స్. Clear? So this is okay now? Now, I hope you understand why we ignored interest in operations. Why we ignored interest in operations? We need to settle after FCFF. Okay. Break this kunawa. Okay, Google. Just for joke. As per cmainter knowledge, I calculated CFAT. Okay. At the time of calculation of CFAT, we are reducing capital expenditure or not? Capital expenditure, purchase of asset, we are reduced, huh? No. That's if company had any capital expenditure requirements, now you have to settle first. CFAT minus capital expenditure. After settlement of capital expenditure, you will get a cash of rupees 10 lakhs. The meaning of 10 lakh is cash availability in the hands of a company for settlement of debenture holder and equity shareholder. That's why it is called FCFF. Okay. Now, on the FCFF, who had a right? Debenture holder, equity shareholder. Whom had a first right? Debenture holder. You need to settle first. What kind of payments you have to settle? Two things. If it is a redeemable debenture, revenue expenditure is there, capital expenditure is there. Every year you have to pay interest. At the end of the year, you have to pay repayment of capital. Both adjustments is there. First, settle the interest. Are you settling interest total or net of interest? The word net of means 1 minus tax. 1 minus tax only నా మొత్తం ఇంట్రెస్ట్ పే చేయను, దానిలో ట్యాక్స్ అడ్వాంటేజ్ తీసుకుని రిమైనింగ్ మాత్రమే పే చేస్తా. ఇప్పుడు పే చేస్తున్నావు అంటే లెస్ చేసుకుంటావా, యాడ్ చేసుకుంటావా? లెస్ చేసుకుంటావు. FCFF మైనస్ ఇంట్రెస్ట్ 1 మైనస్ ట్యాక్స్. క్లియర్? నౌ ఇట్ ఈస్ ఎ రిడీమబుల్ డిబెంచర్. ఐ రీపేడ్ అవుట్ ఆఫ్ FCFF ఓన్లీనా? లెస్ ఆర్ మైనస్? ప్లస్ ఆర్ మైనస్? రీపేమెంట్ ఆఫ్ డిబెంచర్స్ less, plus or minus? Minus. Okay. At the same time, company procured a new debenture holder to the company. Cash inflow or outflow? Add. Clear? That is the adjustments you have to done for FCFF. If you done this, even though after settlement of this you have a cash of 2 lakhs, that is called cash in the hands of company for settlement of equity shareholder, FCFE. Okay. But when it come to the problems point of view, they will not give detailed debt payments or debt receipts. They will give net borrowings. If they give a positive value means receipts is more than the payments. If they given negative value means payments is more than the receipts. Clear? Up to here, okay? Now the point you have to understand, interest settlement we are not reducing at the time of operations. We are reducing after getting the FCFF. That's why we are not consider interest in a NPV calculation. Point to be noted. ఇంట్రెస్ట్ నువ్వు తీసుకోవాలి. ఈబీఐటీని ఇచ్చినా సరే మనం ఇంట్రెస్ట్ నాడు అడ్జస్ట్ చేయాలి. ఎందుకు అడ్జస్ట్ చేయలేదంటే సిఎఫ్ఏటీ వచ్చిన తర్వాత క్యాపెక్స్ తీసేస్తే FCFF వస్తుంది, దాని తర్వాత నువ్వు ఇంట్రెస్ట్ని తీయాలి. క్లియర్? దట్ ఈస్ అ క్లారిటీ యూ హ్యావ్ టు మెయింటైన్. సార్, ఒకవేళ ముందే ఇంట్రెస్ట్ని తీసేస్తుంటే you have to add back. Calculate CFAT, FCFF, then you have to reduce. Clear? Okay. Why? Because in questions they will give EBAD in the question paper. Sometime they will give EAD in the question paper. So for the purpose of calculating CFAT, you have to check 3 conditions, guys. The first one, given profit is operating profit or not. You have to check first. అంటే అది EBIT అయి ఉండాలి. Operating profit is nothing but what, guys? EBIT. Second condition you have to check, after tax or not. It means 1 minus tax adjustment అయి ఉండాలి. క్లియరా? థర్డ్ కండిషన్, యూ హ్యావ్ టు చెక్ క్యాష్ ఆర్ నాట్. What does it mean for cash or not? If any non-cash expenses you already deducted, you have to readjust. Then you will get a cash. Hope you guys you understand. Now, question specifies EBIT. First condition, check operating profit or not. Yes, operating profit. Condition number 1 satisfied. What about the step number 2? After tax or not? No, it is not after tax. Then 1 minus tax, you will get a second condition satisfied. Clear? Next, cash or not? No, it is not a cash. It is accounting profit. Here you have to adjust, add depreciation and amortization expenses. Instead of non-cash, I said directly the names. Depreciation and amortization expenses. This is sufficient. I am not deducted interest. దాంట్లో ఇంక్లూడ్ అయ్యే ఉంది. నాకు CFAT వస్తుంది, FCFF వస్తుంది, దాని తర్వాత చేసుకుంటా. లెస్ చేయలే కదా నేను ఇంకా. నో ఇష్యూ నాకు. క్లియర్ సార్? Now The new thing here, add or less working capital changes. Add or less working capital changes. Sir, why I need to add or less working capital changes? Why I need to adjust working capital changes? Trading account. Opening stock, closing stock. Closing stock, I valued over of 20,000 rupees. Can I use closing stock as a cash? Yes or no? It is non-cash. Are you clear? Because of over writing of a closing stock, my gross profit, what happened, guys? Increased by 20,000 due to non-cash. Due to non-cash. It will reflected in net profit. Net profit, what happened? Increase. It means this 20,000 of extra stock non-cash element included in my EBIT. Guys, clear? Now I have to readjust. If it is a cash, I will agree. Yes, it is a correct process because it is a not which element? Non-cash element. Because of non-cash element, I need to readjust. Are you clear now? Are you got the logic behind this? Sure. Same like a debtors. Sale is a cash element. Credit sale is a non-cash element. Because of debtor valuation more, my gross profit is increases. Due to cash or non-cash? Non-cash. But debtor and this stock is a current assets. That is nothing but working capital. Clear, sir? సో స్టూడెంట్కి వచ్చే డౌట్ ఏంటంటే సార్ మనమేమో ట్రేడింగ్ ప్రాఫిట్స్ గురించి మాట్లాడుతున్నాం, అంటే పిఎన్ఎల్ అకౌంట్ గురించి మాట్లాడుతున్నాం. వర్కింగ్ క్యాపిటల్ అనేది బ్యాలెన్స్ షీట్ ఎలిమెంట్స్ కదా. వర్కింగ్ క్యాపిటల్ అనేది బ్యాలెన్స్ షీట్ ఎలిమెంట్స్ కదా. కరెంట్ అసెట్స్ అండ్ కరెంట్ లయబిలిటీ ఎక్కడ చూపిస్తావు? బ్యాలెన్స్ షీట్లో చూపిస్తావు. వాట్ అడ్జస్ట్మెంట్స్ ఇక్కడ ఎందుకు చేస్తానంటే దే ఆర్ నాన్ క్యాష్, దే ఆర్ లింక్ టు మై ట్రేడింగ్ అండ్ పిఎన్ఎల్ అకౌంట్. బికాస్ ఆఫ్ దట్ అడ్జస్ట్మెంట్స్ మై ప్రాఫిట్ ఇంక్రీజ్ డిక్రీజింగ్ అబ్నార్మలీ అదర్ దెన్ క్యాష్. Because of other than cash, I need to readjust. Clear? Now, what is the readjustment for this? Less from the profit or add to the profit? Less. If current asset is increases, you have to reduce. Stock is a current asset only, na? If current asset is decreases, opposite. For current liabilities, quite opposite. If current liability increases, add. If current liability decreases, less. Guys, clear? But they will not give details. They will give working capital. The word working capital represents current asset minus current liability. If it is positive, means current asset is more, current liability is less. It means what are the rules you are using for the current asset that will reflected for working capitals. If working capital increases, reduce. Working capital decreases, add. This is called changes, add or less, change in working capital. Hope you understand. Clear, guys? So after adjusting all those things, you will reach to which point? CFAT. Next, you know. Less capex, FCFF, interest 1 minus tax, net borrowings, you will get FCFE. Next, guys. If question specifies EAT, if question specifies EAT, what is the meaning for EAT? Earning after tax. Now check the first condition. Operating profit or not? No. Only EBIT is known as operating profit. PAT is known as net profit. దాని మధ్యలో రెండు అడ్జస్ట్మెంట్లు ఉన్నాయి, ట్యాక్స్, ఇంట్రెస్ట్. క్లియర్ సార్? Now here interest is deducted or not deducted? Deducted. Tax is adjusted or not adjusted? Now add interest 1 minus tax directly. Interest 1 minus tax directly. Now it will converted into this one. Clear, sir? Now operating profit or not? Yes, is the conversion is happen. After tax or not? Yes, it is an after tax. Clear, sir? Next, cash flow or not? No. Add depreciation and amortization expenses, add or less change in working capital. You will reach CFAT, then you know how to travel. Clear? Instead of this, sometimes they will give sales. Instead of this, sometimes they will give a sales. If in this two things are the difficulties. If sales, you know the each and every step. Less cost of goods sold, contribution, less operating expenses, not include interest. Sorry, include interest. ఇంట్రెస్ట్ కావాలి నాకు, అప్పుడు నాకు ఏమొస్తుంది, ఈబిడా వస్తుంది. Earning before interest, tax, depreciation and amortization expenses. First here I am reducing depreciation, amortization expenses and interest for tax advantages. Again I will readjust for the purpose of CFAT calculation. Interest need to settle after FCFF only. That's why at calculation of CFAT I am not reducing the interest. దాన్ని ఇంక్లూడ్ చేసుకుని తీసుకొని వస్తా. ఎప్పుడు చేస్తా దాని సెటిల్మెంట్? FCFF దగ్గర చేస్తా. ఒకవేళ నేను ఆల్రెడీ ఇంట్రెస్ట్ని లెస్ చేసేసి ఉంటే యాజ్ పర్ క్వశ్చన్ రీఅడ్జస్ట్ చేయాలి. ఏ ఇంట్రెస్ట్ని రీఅడ్జస్ట్ చేయాలి? నెట్ ఆఫ్ ఇంట్రెస్ట్ని చేయాలి. ఎందుకంటే ప్యాట్ కదా మనకు వచ్చిండేది, అంటే ట్యాక్స్ కూడా దాని మీద బెనిఫిట్ తీసుకున్నాం కాబట్టి రెండు కలిపి యాడ్ చేసుకోవాలి. క్లియర్? ఎనీ డౌట్ ఆన్ దిస్? షూర్? ఓకే. కమ్ టు ప్రాబ్లం నెంబర్ 2. సార్, it's a complication thing. If you understand this only, we can solve. Doubts ఏదైనా ఉంటే అడగచ్చు. Come to illustration number 2, guys. Sir, I missed one thing in chapter 5, sir. In your material, you have 3 segregations. Problems for CRD, problems for self-practice, problem for workbooks. For first chapter, I included in its CRD and self-practice. From 6th chapter onwards, you have 3 classifications: CRD, self-practice, workbook. You have to touch all problems. CRD ఎలాగో మనం క్లాస్లో డిస్కస్ చేసుకుంటాం. నెక్స్ట్ సెల్ఫ్ ప్రాక్టీస్లో కొన్ని ఇంపార్టెంట్వి నేను చెప్తాను, ఓవర్వ్యూగా చెప్పేస్తాను ఏం చేయాలి, ఎలా చేయాలని. వెన్ ఇట్ కమ్ టు ద వర్క్ బుక్ ఆల్సో సేమ్ లాజిక్ ఐ యూజ్డ్. మొత్తం సాల్వ్ అయితే చేయను. క్లియర్? ఏవైతే చెప్పినానో కొన్ని దాన్ని స్ట్రెస్ చేసి చదువుకోండి. సో దర్ ఈస్ ఎ నోషన్, మై బుక్ ఈజ్ ఎ ఎక్సలెంట్ బుక్ ఇన్ ద మార్కెట్. సో నాకు స్టూడెంట్స్ చెప్పింది లాట్ ఆఫ్ క్వశ్చన్స్ కేమ్ ఫ్రమ్ దట్ మెటీరియల్ ఓన్లీ. బట్ లాస్ట్ అటెంప్ట్ నా మెటీరియల్ నుంచే వచ్చాయి. నా మెటీరియల్ అంటే పెద్ద నేను తయారు చేసిందే కాదు, నా ఓనేం కాదు, బోర్డ్ బుక్ మొత్తం ఒక ప్లేస్ కలెక్ట్ చేశాను అంతే. సో ఇక్కడ పాయింట్ ఏంటంటే అందరూ CRD మీద ఫోకస్ చేశారు, సెల్ఫ్ ప్రాక్టీస్ మీద ఫోకస్ చేయాలి. సెల్ఫ్ ప్రాక్టీస్లో ప్రాబ్లమ్స్ వచ్చేసాయి. లాట్ ఆఫ్ స్టూడెంట్స్ ఆర్ ఫేస్ ది డిఫికల్టీ. అదే మన రెగ్యులర్ స్టూడెంట్ కానీ అయితే దే కెన్ ఈజీలీ క్రాక్. వై? బికాస్ వీ డిస్కస్ సెల్ఫ్ ప్రాక్టీస్ ఆల్సో. సార్ క్లియర్? ఇన్ సెల్ఫ్ ప్రాక్టీస్ డోంట్ లూజ్ చేయద్దు, దేని లూజ్ చేయద్దు, ప్రతిదీ చూసుకోబో. Illustration number 5. In self practice, put a 5 star in chapter 5. This is topic related to incremental replacement decision. Try this. నీకు అర్థం కాకపోతే మళ్ళీ వచ్చి అడుగు, నేను చెప్తా. Are you clear? Here you have to consider all are incremental. Extra only you have to consider. Extra cash flows, extra cash outflow. Are you clear? Next, when it come to problem number 2, assume that the following details are given for a company: sales 1 lakh, cost 75,000. There is no specification about the cost. Can I take a variable cost? Yes or no? Next, depreciation 20,000, tax 35%, change in net working capital. It is not minus, sir, just a column. So 1,000. Change in capital spending 10,000 rupees positive, interest 1,000, and the company resort the net borrowings of 5,000. Net borrowings are positive or negative? What does it mean for positive? Add to FCFF. Why? Because inflows are more than the outflows. Clear? Now the year calculate FCFF and FCFE. FCFF and FCFE. Now sales minus cost 75,000. Are you clear? So what is an outcome you will get? 25,000 value. Name of this? EBITDA. Are you clear? Minus depreciation. Go with the direct calculation. Depreciation. How much? Now what is the answer? Out of that you have to pay tax. How much? 35%. 650 is a PAT. Yes. Add depreciation again. Are you clear? Can I use a name called CFAT? CFAT కదా అది మీకు ఇంట్రెస్ట్ ఎక్కడ లెస్ చేసామా? లేదు. డిప్రిసియేషన్ లెస్ చేసాం, ట్యాక్స్ అడ్వాంటేజ్ వచ్చింది. అగైన్ మళ్ళీ ఏం చేస్తున్నాం? యాడ్ బ్యాక్ చేస్తున్నాం. CFAT వచ్చింది. వాట్ నెక్స్ట్? Working capital changes is there, na? You have to adjust the working capital changes. What are the working capital changes here? 1,000 plus or minus? Plus value, just it is a hyphen. 1,000. What is the meaning for 1,000? Increasing. Now increases means you have to reduce. You have to reduce or add. Current asset increases. Profit abnormally పెరిగి ఉంటుంది. ఏం చేయాలి? డిక్రీజ్ చేయాలి మనం. లెస్. ఓకే, డన్. నెక్స్ట్ క్యాపెక్స్. హౌ మచ్? You will get FCFF. Out of that you have to settle interest 1 minus tax, or just interest? Here they provided interest 1 minus tax. So they provided interest. Out of that you have to pay 1,000 into 65%. 650. Borrowings is there? Add or less? Add. Now you will get FCFF. Now what is the answer? 16,600, 12,250. కాన్సెప్ట్ తెలిసి ఆడుకుంటూ వెళ్ళిపోవడం అన్నీ. క్లియరా బాయ్స్? క్లియరా? ఇంట్రెస్ట్ need not to settle before FCFF. If you know that point, you can crack. అంటే అప్పుడు ఏంటి, నువ్వు EBATలోని ప్రాఫిట్లోనే ఇంట్రెస్ట్ ఇంక్లూడ్ చేసుకుంటే లాస్ట్ దాకా తీసుకొని వస్తావు. క్లియర్? So sales minus cost, you will get EBITDA, minus depreciation and amortization expenses, you will get EBAT, minus tax 35%, no PAT 3250, add back depreciation and expenses 20,000, minus increasing working capital 1,000, you will get a CFAT 22,250, capex 10,000, you will get a FCFF 12,250, minus interest 1 minus tax 650, plus net borrowings 5,000. You will get FCF. Clear? Now open problem number 1. ఇలాంటి ప్రాబ్లమ్స్ వస్తే ఆడుకుంటూ చేసుకోవచ్చు నువ్వు. యూ కెన్ అబ్జర్వ్ ఇన్ December 8, not problem number 2, it's MCQ. Problem number 1. Observe the references. December 18 total marks, December 23 8 marks. Nothing is there in the question. Nothing is there. Just you need to bring that 10 lakh, 15 lakh, 20 lakh, 25 lakh, 30,000 to present value. Are you clear? Now read the question. You are the manager of F Limited. On the project you are considering acquisition of R Limited. Ria is the owner of R company. He is willing to consider selling his company to F only if he offered all cash purchase price of 50 lakhs. Seller name Riaj. Who was the purchaser? Manager of F Limited. Guys, clear? Now seller is ready for 50 lakhs. 50 లక్షలు ఇచ్చే కంపెనీ తీసుకెళ్ళు. If seller said 50 lakhs, are you ready to give that money? As a purchaser, are you ready to spend that much of money from that business without calculations? That's the calculation part you have to do. 50 లక్షలు ఇచ్చేస్తాను అన్నాడు. దా సూట్ కేసుని తీసుకెళ్తా ఉంటావా? మన రిలయబిలిటీ చెక్ చేసుకోవాలి కదా. ఇఫ్ ఐ పర్చేస్ దట్ ఆర్గనైజేషన్ ఐ విల్ గెట్ ఎ మోర్ బెనిఫిట్ ఆర్ లెస్ బెనిఫిట్. ఆర్ యు క్లియర్ సార్? ఇఫ్ ఇట్ ఇస్ లెస్ దెన్ 50 lakhs I will not accept that proposal. If the benefit is more than 50 lakhs, yes, I will agree. Sir, clear? For the purpose of calculation for purchaser, they provided selling company information. Clear? Deal price you have to decide now. Are you clear, sir? Deal price never decide చేస్తారు, purchaser decide చేస్తాడు. So when it come to here, cash flows is given for 5 years. If I purchase that company, I will receive first year 10 lakhs, second year 15 lakh, third year 20 lakhs, fourth year 25 lakh, fifth year 30 lakhs. Clear? But they all are future values. But I need to take a decision now. Now with help of present value factor given, you decide to go ahead with the acquisition. It will be founded with a F standard mix of debt and equity at the firm's weighted average cost of capital 9%. What is the present value factor? What is the required rate of return? 9%. Now 1 divided by 1.09 into 10 lakhs M plus. No, it's not possible. I think it's not possible. Possible, huh? Again, you have to do every year. So okay, then tell me present value factor. 1 divided by 1.09, 0.917. Again second year 0.842. Again third year. Check that one. Clear? Multiply with the cash flows, you will get a present value. Sum of present value 74 lakh 45,175. If I purchase that company, the totally I can gain 75 lakhs. But what is the proposal they said? 50 lakhs. If I pay 50 lakhs, I can get a more benefit of 24 lakhs. Now what's your call? That's it. 12 marks in December 18. Hope you guys clear? Done. Come to illustration number 3. Put a 5 star for this. Already this question asked in a new syllabus. Cool. We will discuss later. Why? Because cash flow concept will be dilute. దీనిగా డిస్కస్ చేస్తే cash flow related problems dilute అవుతాయి. Come to problem number 4. In whole syllabus of business valuation and SPM, in every attempt they will touch this concept. Are you clear? But new syllabus, they're not focusing on that. Come to problem number 4. Read the question. Tell me what are the insights they given. Shivasakti Limited is trying to buy a Beta India Limited. They provided Beta India Limited information. Yes or no? If I buy that Beta India Limited, first year I will generate negative cash inflow of 10 lakhs. Second year onwards, positive 5, 10, 15, 20. Can I use a word called their grown cash inflows? Constant grown or without growth? Growth only. 5, 5, 5, 5 without growth. But it is 5, 10, 15, 20. Already they are included short-term growth. How many years here? 5 years. After that they said perpetual information. So company I purchased on the basis of going concern assumption. Are you clear? Now what is the valuation? Present value of forecasted cash inflow plus present value of terminal cash inflow. How to calculate present value of terminal cash inflow here? Expected cash flow divided by R minus C. This is nothing but Whipple Venture Limited in chapter 5. 3 years perpetual calculation. Last but one problem, I think. Vipal venture. At that point, we are using dividend. Here I have to use what? Cash flow. What is the step 1 as per discounted cash flow method? Cash flow calculation. They said directly, I calculated. What is the step 2? Forecasted cash inflow calculation. That also they said minus 10, 5, 10, 15, 20. What is the step 3? Terminal value calculation. Yes, you have to figure out. There is no terminal value. What is the step 4? Weighted average cost of capital. They specified. What's the weighted average cost of capital? 15%. The discount rate is nothing but weighted average cost of capital. 15%. Step 4 also completed. What is the best step 5? Present value of forecasting cash inflow plus present value of terminal cash inflow. 3 steps నువ్వు చేయాల్సిన అవసరమే లేదు. డైరెక్ట్ లాస్ట్ బట్ వన్ కాదు, థర్డ్ స్టెప్, ఫోర్త్ స్టెప్ చేస్తే అయిపోద్ది, ఫిఫ్త్ స్టెప్ చేస్తే అయిపోద్ది. క్లియర్ సార్? బట్ ఇన్ ఫ్యూ ప్రాబ్లమ్స్ యూ హ్యావ్ టు స్టార్ట్ ఫ్రమ్ స్టెప్ 1. ఓకే, నౌ సి year 1, year 2, year 3, year 4, year 5. Minus 10, 5, 10, 15, 20. Present value factor with help of 15%. You will get a present values. You will get a present values. Clear? Now, present value of cash inflow up to 5 years. There is a 5th year to infinity calculation called perpetual value. Guys, clear? Now, expected cash flow divided by R minus G. What is the expected cash flow here? Previous year ఏదైతే ఉందో అది మనకి కరెంట్ ఇయర్ అవుతుంది. What about the 5th year previous year? Sorry. 6th year to infinity. 6th year to infinity. అంతే కదా, 5 years ఇన్ఫర్మేషన్ మన దగ్గర ఉంది. 6th year day 1 నుంచి ఇన్ఫినిటీ లైఫ్కి మనం ఫైండ్ అవుట్ చేయాలి. ఫర్ day 1 of 6th year to infinity life. Now what is the current cash inflow? Previous year ending is nothing but current year for us. What is the previous year? 20 lakhs. Are you clear? Can I use 20 lakhs is expected? No. This is a current one. Expected means you have to add growth. What growth? Short term growth or long term growth? Long term growth. Now 20 into, what about the long term growth percentage? 5%. 1.05 divided by R minus G. What is the R here? 15% and 8%. 2 is there. Drop to 8% behind the 5th year. Behind the 5th year. What I need to consider? 15% or 8%? Why? Because this calculation for behind the 5th year. Clear? So 0.08 minus, what is the growth rate? 2 growth rates is there. 0.05. Now value please. 20 into 1.05. 21 lakhs. Divided by 8 minus 0.03. That is a value, not a present value. Clear, sir? Now you have to send that 700 to 0 period. Now the point is, which percentage I need to consider for present value factor is a question. Which year also question. Which year means I am using common sense. Which year? Which year is where we are calculating day 1 of the 6th year. Which year ending it is? 5th year. Are you clear? Because of 5th year, which factor I have to consider means 15%. Clear? Behind the 5th year only 8%. But when it comes to the calculation of present value factor, common sense is 5th year value only. Now 5th year ki which cost of capital we are using? 15%. Confuse అవ్వాల్సిన point ఏం కాదు ఇక్కడ. Are you clear? But when it comes to R, you have to consider long-term cost of capital. Are you guys clear? But when it comes to the present value purpose, you have to use short term only. Why the short term? అక్కడ ఏమని మాట్లాడుకున్నాం మనం విపుల్ వెంచర్ దగ్గర? టర్మినల్ వాల్యూని ప్రజెంట్కి ఎలా తీసుకురావాలంటే ఏం మాట్లాడుకున్నాం?
ఏ ఇయర్ ఎండింగ్లో జరుగుతుందో క్యాలిక్యులేషన్ ఆ ఇయర్ నుంచి తీసుకురావాలి. ఎందుకంటే ఇన్ఫినిటీ ఇయర్ అనేది ఎన్ తెలియదు నాకు. ఏ ఇయర్ ఎండింగ్లో జరుగుతుంది? 6th ఇయర్ ఎండింగ్లో జరుగుతుందా, 5th ఇయర్ ఎండింగ్లో జరుగుతుందా? అంటే 5th ఇయర్ దాటితే 6%, 8%, 5th ఇయర్ దాకా 15%. కాబట్టి ప్రజెంట్ వాల్యూ ఫ్యాక్టర్ అట 15% ఓన్లీ. క్వశ్చన్లో చాలా క్లారిటీగా ఉంది మనకి. ఆర్ యూ క్లియర్? సో డన్. సో వెన్ ఇట్ కమ్ టు illustration number 5, put a 5 star for this 5. Following information is given in respect of Wine Limited, which is expected to grow at a rate of 20% per annum. Unnecessary information is more is there in the question, sir. If the remove the paragraph, it's easy to understand the question. ఆ పారాగ్రాఫ్ అండ్ అడిషనల్ ఇన్ఫర్మేషన్ రెండిట్లో ఒకటే చెప్పడం వల్ల స్టూడెంట్ కన్ఫ్యూజ్ అయిపోతాడు. పైన ఏమైతే చెప్పాడో అదే సోది కింద చెప్తాడు పాయింట్ మార్చి. అరే క్లియర్? ఇదేమన్నా రెగ్యులర్ క్లాసా కూర్చొని పాయింట్ టు పాయింట్ డీకోడ్ చేసుకోవడానికి? ఎగ్జామ్ అంత టైం ఉండదు మన దగ్గర. అరే క్లియర్? బట్ ఒకవేళ ఇట్లాంటి క్వశ్చన్స్ వస్తే ఎలా ఎవాపరేట్ చేయాలి, ఎలా డైల్యూట్ చేయాలి క్వశ్చన్ అనేది చెప్తుంది. సో ద ఫాలోయింగ్ ఇన్ఫర్మేషన్ ఈస్ గివెన్ రెస్పెక్ట్ టు వైన్ లిమిటెడ్ విచ్ ఈస్ ఎక్స్పెక్టెడ్ టు గ్రో అట్ ఎ రేట్ ఆఫ్ 20% per annum for the next 3 years. Can I consider as a forecasted is 3 years? Forecasted is 3 years. After which growth rate will stabilize at 8%. Long term is there means perpetuity is there. Are you clear? Now what is the valuation? Present value of forecasted cash inflow plus present value of terminal cash inflow. Okay. Question start from the scratch. Revenue. Are you okay? Revenue, cost of goods sold, operating expenses 2,250, capital expenditure 750, depreciation, that amount included in your operating expenses 600. This is the income statement they said. Now additional information is given, guys. During high growth period, revenue and EBIT will grow at 20% per annum. Array common sense yaar. Sales minus cost of goods sold minus operating fixed cost, I will get a EBIT. If I consider as said in the first information 20%, revenue 20% grow చేస్తాను కదా, కాస్ట్ ఆఫ్ గూడ్స్ సోల్డ్ కూడా 20% గ్రో చేస్తాను కదా, ఆపరేటింగ్ ఎక్స్పెన్స్ కూడా 20% గ్రో చేస్తాను కదా, చేస్తే నాకు ఏం ఆన్సర్ వస్తుంది? గ్రోత్ వాల్యూవే వస్తుంది. ఎంత గ్రో ఏంటిది అక్కడ? ఈబీఐటీ 20%. క్లియర్? సో పైన ఇక్కడ ఏం చెప్పాడు మనకి? షార్ట్ టర్మ్ ఎంత గ్రో అయిద్దంటే 20% per annum గ్రో అయిద్దంట. అంటే ఇప్పుడు ఫోర్కాస్టింగ్ 3 yearsకి విత్ గ్రోత్ తీసుకుంటావరా, వితౌట్ గ్రోత్ తీసుకుంటారా? విత్ గ్రోతే తీసుకోవాలి. ఎంత తీసుకుంటావు? 20%. నువ్వు సేల్స్ని గ్రో అప్ చేస్తున్నావు అంటే కాస్ట్లో కూడా గ్రో అప్ చేయాలిగా. కాస్ట్లో కూడా గ్రో అప్ చేసావంటే వచ్చే ప్రాఫిట్ కూడా ఏమై వస్తుంది? నీకు గ్రో అయ్యే వస్తుంది. అది క్లియర్? ఎంత గ్రో అవుతుంది? నువ్వు ఎంతైతే గ్రో చేస్తున్నావో యువర్ అవుట్కమ్ ఆల్సో బి గ్రోన్ బై దట్ పర్సంటేజ్ ఓన్లీ. ఇట్ మీన్స్ 20%. దట్స్ ద పాయింట్ హియర్ స్పెసిఫైయింగ్ హిమ్. రెవెన్యూ అండ్ ఈబీఐటీ. రెవెన్యూ 20% ఇంక్రీజ్ అయితే ఈబీఐటీ కూడా 20% ఇంక్రీజ్ అవుతుంది. నౌ ద క్యాపిటల్ ఎక్స్పెండిచర్ నెట్ ఆఫ్ డిప్రిసియేషన్. హైలైట్ ద వర్డ్ నెట్ ఆఫ్. Highlight the word net off. Net of depreciation will grow at 15% per annum. So what is the adjustment of depreciation as per flow of calculation? First we are reducing, then we are adding. What about the adjustment of capital expenditure? Less from the CFAT. Now we have PAT, add depreciation, you will get CFAT minus capex. Instead of that, they're saying that combine these two. That is called net off. Combine these two, net off. So what about the capital expenditure? 750. What about the depreciation? Now what is the net effect? 600 minus 750 minus
you have to adjust this 150 to your PAT directly. Clear, sir? But don't consider 150 grow up with 15%. Grow up with 15%. జనరల్గా అయితే మనం డిప్రిసియేషన్ యాడ్ చేసి క్యాపిటల్ ఎక్స్పెండిచర్ లెస్ చేస్తాం విత్ గ్రోత్ వాల్యూస్తో. బట్ ఇక్కడ స్పెషల్ అడ్జస్ట్మెంట్ ఏం చెప్తున్నారంటే రెండింటిని ఇండివిజువల్గా చేయొద్దు, కలిపి చేసే అంటున్నాడు. కలిపి ఎలా చేయమంటున్నాడు? డిప్రిసియేషన్ ఎలాగో యాడ్ చేస్తావు, క్యాపిటల్ ఎక్స్పెండిచర్ ఎలాగో లెస్ చేస్తావు కదా, దాన్ని నెట్ చేయి. నెట్ చేసిన దాన్ని గ్రో చేయి. అది క్లియర్? ఒకవేళ ఇఫ్ యూ హ్యావ్ ఏ క్యాపిటల్ ఎక్స్పెండిచర్ మోర్, యూ విల్ గెట్ ఏ నెగటివ్ ఆన్సర్. If you have a depreciation is more, you will get a positive answer. Positive you need to add to CFAT, or a negative you need to reduce from the CFAT. Are you got the clarity now? That is the meaning of net off. Clear? Next. From year 4 onwards, can I use what called perpetual point of view? Normal growth period revenue and EBIT will be grow only 8% per annum. Okay. The incremental capital expenditure will offset. Again, highlight the word offset. Offset. The word offset represents 0. The word offset represents 0. Now, first year, 150 into 15% growth. Second year, first year value into 15% growth. Third year, second year value into 15% growth for 3 years of capital expenditure and depreciation adjustment. When it comes to the terminal value, depreciation and capital expenditure both are same, the value is 0. That is the meaning of offset. Sir, clear? Hope you guys you understand. Next, offset by the depreciation. Now, during both high growth and normal growth period, net working capital requirement will be 25% of revenue. Growth period net working capital will be 25% of revenue. Now, put a particular star for this working capital adjustment, and that I think no need of stars. Net of meaning you understand, and offset also you understand. Clear, sir? Now, when it comes to the working capital, based on that, tell me how you calculate working capital here. ఆ సెంటెన్స్ బేస్ చేసుకొని చెప్పు నాకు అమౌంట్ ఆఫ్ వర్కింగ్ క్యాపిటల్ ఎలా ఫైండ్ అవుట్ చేస్తావు? 25% ఆఫ్ సేల్సా? 25% ఆఫ్ ఫస్ట్ ఇయర్ సేల్, 25% ఆఫ్ సెకండ్ ఇయర్ సేల్, 25% ఆఫ్ థర్డ్ ఇయర్ సేల్, 25% ఆఫ్ ఇంక్రిమెంటల్ సేల్ ఆఫ్ టర్మినల్. ఎస్ ఆర్ నో? ఇఫ్ యూ డూ లైక్ దట్, యువర్ ఆన్సర్ ఈస్ రాంగ్. ఆర్ యూ క్లియర్? సో హియర్ change in working capital concept is there. Change in working capital. It means working capital at current year minus working capital at previous year. Working capital at current year minus working capital at previous year. Now, this kind of logic they are using for this calculation. Working capital equals to current year sales minus previous year sales into 25%. నువ్వు డైరెక్ట్గా 25% తీసుకెళ్ళి సేల్స్ మీద అప్లై చేసావు అనుకో, మొత్తం ప్రాబ్లం వర్కింగ్ క్యాపిటల్ ఉంటుంది, ఇంకేం ఉండదు. 8,000 మీద 25% వర్కింగ్ క్యాపిటల్ అడ్జస్ట్మెంట్ అంటే ఎంత వస్తుంది వాల్యూ? నీకు వచ్చే ప్రాఫిట్కి వర్కింగ్ క్యాపిటల్కి డిఫరెన్సియేషన్ చూసావు ఎప్పుడన్నా? వర్కింగ్ క్యాపిటల్ అనేది పార్ట్ ఆఫ్ ది అడ్జస్ట్మెంట్. బట్ నువ్వు ఇలా 25% తీసుకెళ్ళి డైరెక్ట్గా సేల్స్ మీద అప్లై చేసావంటే వర్కింగ్ క్యాపిటల్ ఉంటుంది మొత్తం క్యాలిక్యులేషన్. ఇట్ ఇస్ నాట్ రైట్ వే టు క్యాలిక్యులేట్ లైక్ దట్. క్లియరా? నౌ సింపుల్ మ్యాన్, 7,500 into 25%. How much? 7,500 into 25%. 18. The only working capital adjustment is 1875 lakhs. నీకు ప్రాఫిట్ ఎంత రాదు ఒక. సార్ క్లియర్ సార్? ఫర్ దిస్ వర్కింగ్ క్యాపిటల్ యూ హ్యావ్ టు కన్సిడర్ ఆన్ చేంజ్. సార్ హౌ ఐ ఫైండ్ అవుట్ చేంజ్? ఎవ్రీ ఇయర్ సేల్స్ ఆర్ గ్రోయింగ్ నా. Now it means previous year sale is less, next year sale is more. The difference 20% is there na. That is the working capital value into 25%. Clear? So I hope you understand this additional information. Yes or no? Now particulars year 1, year 2, year 3 terminal. Now what is the year 1 sales? What is the year 1 sales? If out of flow, if you consider 7,500 gaya, inta so research gaya, 7,500 is a current year. They are not specified year 1 value. Guys, clear? For 7,500, you have to consider 20% growth. You will get a first year ending value. Clear? Sir, then why you are calculated year 1 is a 4 lakhs in chapter 5 last problem? They said year 1 value. It means ending value. బట్ ఇక్కడ మనకు ఆ క్లారిటీ ఇవ్వాల. క్లారిటీ ఇవ్వకపోతే ఏం చెప్పా, ఇక్కడ ఉన్న ప్రతి ప్రాబ్లం అలానే ఉంటాయి. వాడు ఏదైతే నీకు వాల్యూ ఇస్తాడో ఇట్ ఈస్ ఎ కరెంట్ వాల్యూ. యూ హ్యావ్ ఫర్ ద క్యాలిక్యులేషన్ పర్పస్ యూ వాంట్ ఎక్స్పెక్టెడ్ వాల్యూ. హౌ కరెంట్ వాల్యూ కన్వర్టెడ్ ఇంటూ ఎక్స్పెక్టెడ్? ఇఫ్ యూ యాడ్ ద గ్రోత్ ద కరెంట్ వాల్యూ కన్వర్టెడ్ ఇంటూ ఎక్స్పెక్టెడ్ వాల్యూ. ఫస్ట్ పాయింట్ డిసైడ్ చేస్తుంది ప్రాబ్లంనే, అంతే కదా? వై? బికాస్ దాన్ని బేస్ చేసుకుని చాలా ఉన్నాయి ఇక్కడ. నౌ సీ ద సొల్యూషన్. ప్రాబ్లం నెంబర్ 5. సార్ డౌటా? Problem number 5. So what is the first year value? Sales 9,000. Why? Because we have to grow up that. Now second year also, first year value into 20% growth. Third year, second year value into 20% growth. What about the terminal? Third year value into 8% growth. When it comes to the cost of goods sold, I have to adjust growth for cost of goods sold also, na? Yes or no? Now, 3,000 into 25% increment. Next year into 20%. Previous year into 20%. Not next year. Previous year into 20%. Previous year into 20%. This one into 8%. Now you will get, next also you have to adjust operating expenses. Including depreciation or excluding depreciation? Including depreciation or excluding depreciation? Exclude them. Are you clear, sir? If excluded, there is a no adjustment of minus depreciation. If it you included, you can do another step called minus depreciation. You will get EBT less tax. Are you clear, na? Now operating expenses, how much? 1650, na? But what the given value? What's the given value? Why I consider here 1650? Current year. Depreciation is included. If you less, you will get a current year 1650. If you grow with the 20%, you will get a first year value. How much? 3420. This is called EBITDA. Again 20%. Again 20%. Again 8%. Clear? Now out of EBITDA, no need to add. Why? Because already added value, growth value, added value is less cost, we get a profits. దీనికి మళ్ళీ నువ్వు అడ్జస్ట్ చేయాల్సిన అవసరం లేదు. Less depreciation. Why I am reducing depreciation here? For the tax advantage purpose. What about the depreciation? 600 for what? Current year. I want first year value with growth. Again 20%, again 20%, again 8%. Are you clear? Next, you will get EBAT. Out of EBAT, are you reducing interest? No. FCFF. After FCFF, I need to calculate. Less tax directly, 30%. You will get net operating profit after tax. Now, for this, you have to add depreciation less capital expenditure. You will get directly answer FCFF. But they said adjustment. Net off concept and offset concept. Capital expenditure minus depreciation, how much? 150, yeah? 150. Minus or plus? Minus. I mean, it means I need to minus from the net, no PAT. Directly 150 or grown value. 15% is there for special transaction. 15%. Now 150 into 15% increment. 173. Next again again 15% increment. 199. Again 15% increment. Again 15%. Why? Offset. Not 8%, offset. Not 15%, not 8%, offset. What is mean for offset? 0. Clear? If you adjust this, you will get a changes in working capital also there, na? Changes in working capital is also there. You have to adjust that also. How much? 25%. On which value? Yeah, first year is a current year, 0 is a previous year. Yes or no? No? What is the current year sales? 9,000. What about the previous year sale? 7,500. What is the difference? 2,500 into 25% is your working capital. How much more? 375 or 675? 9,000 minus 7,500 into 25%. 625. Then why I recorded 375? What about the next year? Second year sale minus first year sale into 25%. Second year sales, please. 10,800 minus 9,000 into 25%. 450. It means here I recorded wrongly. Rectify that. Just a wrong name, wrong number. So same like this. Terminal sales minus third year sales, you will get a difference into 25%. You will get a terminal value working capital. So you will get what, guys? FC, FF. First year, please, 1342. Second year, 1620. Third year, 1953. Now keep the point in your mind. This 2680 is there, na? That is terminal value or terminal cash? Terminal value or terminal cash? No. If you divide it with R minus G, then only you will get a value. Where you done that? You not done. You just calculated numerator. Expected cash flow. Hope you guys clear? Now if you divided with R minus G, that cash converted into value. Are you clear now? Now with growth or without growth? With growth. Long term has a 8% growth. Now divided by R minus G. Now what is R? 15%. Minus G, 8%. Numerator, expected cash inflow. That's I calculated. 2680 divided by 0.07. Now the answer? 38,286. Understand the difference. 2680 is a cash flow of the terminal. It is not a value. If you want value, you have to divide it with a capitalization rate. If you have a growth rate, capitalization rate minus growth. If you don't have a growth rate, direct R capitalization rate. Clear? Done. So can I call it as all summation is known as valuation? No. They are future values. You have to bring present value. Why? Because it's which method? Discounted cash flow method. Now present value factor at the rate of 15%. You will get a present values, multiply with the cash flow, you will get a present value. Sum of present values is known as valuation. That's it about today, guys. We will discuss tomorrow. Just room kelli oka 15 minutes time spend chesi what is what ఏవైతే మనం అడ్జస్ట్మెంట్స్ అని మాట్లాడుతున్నామో మనం ఇబ్బంది ఎక్కడైతే ఫీల్ అవుతున్నామో దాన్ని చెక్ చేసి ఒకతోడ క్యాలిక్యులేట్ చేసి వదిలేసే. దట్స్ యువర్ ప్రిపరేషన్. ఆర్ యు క్లియర్? ఓకే, థ్యాంక్ యూ.